Good morning, sir.
சிவா பர்மிஷன் கொடுங்க பிபிடிக்கு. ஓகே, அண்டர்ஸ்டாண்ட். Good morning, all of you.
Good morning, ma'am.
Good morning, ma'am. Good morning, ma'am.
Good morning, ma'am.
Very good
Good
morning.
morning, ma'am.
Very good morning.
Ma'am,
Yes.
Ma'am, sorry for the interruption. I missed the last week classes, ma'am. But I got it in YouTube.
Yes, YouTube you can watch.
Okay, ma'am. I can watch this continually watch this week, right?
Yes, this week you can watch.
Yeah. Okay. Thank you, ma'am.
Last class, what you have learned? Do you remember? Previous class, what are the things you have learned? Recollect.
Yes, ma'am. Final accounts.
Final accounts, basic accounting concepts, conventions,
Balance sheet.
journal ledger, trial balance, final accounts, then depreciation accounting, then
Ratio analysis.
Ratio analysis, that is we can divide it into liquidity ratios, efficiency ratios, long-term solvency ratios, profitability ratios, then problems also we have solved, right? Now let us see unit 3, that is fund flow statement and cash flow statement, right?
Yes, ma'am.
Can you see this slide?
Yeah.
Yes, ma'am.
Okay.
Yes, ma'am.
What is fund flow statement? That is what is fund in final statements. At the end of the year, we used to prepare final statements to know the ascertain the profit or loss, or what is the position of assets and liability, right? Only that final statements gives you only these two informations, but we have to interpret for taking decision making, for management decision making, various stakeholders. Who are all the stakeholders? Shareholders, then government for taxation, and then those who are giving loan, that is debtors, and then debenture holders, and so many, then management. So all these stakeholders are interested to analyze the final statements, right? For that analysis of final statements, we have already used the technique, the ratio analysis. Ratio analysis is also a technique to use the interpretation of final statements. So what is the liquidity position? What is the solvency position? What is the profitability position? What is the efficiency? What is the turnover? So these things we have interpreted through this technique. Similarly, fund flow statements also, it is a technique, or this statement we used to prepare to take various decision making of working capital. Fund means here, what is generally, as a layman, fund means what? Money utilized for any other purposes. That is called fund. Fund is utilizing for business purposes now. So if you, hello, listen. Somebody is talking. Mute your mic. So fund here in business, in this statement, fund refers to working capital. So what is working capital? Working capital means what? What is working capital? Can you say, anybody? What is working capital? Hello? Hello?
To invested for business.
Yes, that is fund which are utilized for running the business. That is day-to-day expenditure. To meet the expenditure. Say for example, working capital cycle. You are investing some money for production, right? Purchase of raw materials. You have to pay salaries to wages to your workers. Then that raw material converted into work in progress. Work in progress converted into finished goods. So finished goods, when it goes for sales, it may be a cash sales or credit sales. When you are collecting money from sale proceeds, it will take some certain time for production and selling and cash collection, cash receivables. Okay, so that cycle is called working capital. Working capital means fund you have to recover from your production. That will take some, depends upon the size of the business, depends upon the size of the cycle. So some business it may go for 30 days, some business you can take back 90 days. It depends upon the size of the business, depends upon the your nature of business. So say various factors which are depending upon your working capital. So here what we are analyzing in this statement, then this fund flow means inflow, outflow, flowing, fund comes into the business. How it is utilizing in the business, that is outflow. Inflow, outflow, that is the fund flow statement. Okay, fund flow statement. See, this is a method which reveals between the two business balance sheet statement, previous year and current year. In between these two statements, what is the increase or decrease the working capital, that we have to find out. So how to find out? I tell you, there are two methods. The schedule of changes in working capital, one thing. Another thing is fund flow statement, right? So for what is the changes, increase or decrease? Whether it is after seeing this, if it is increased, what is the effect? What is the, if it is decreased, whether is it sufficient to run the business, or if it is too much, you can utilize for invest in some other business concerns. Okay, so the financial state, the fund flow statement is a statement of, we can otherwise called as sources and applications of fund. Sources means inflow of fund, how fund comes into the business. Applications means utilization of fund, how you are utilizing in the business. That is called fund flow statement, right?
Ma'am,
Ma'am, is fund flow is similar to cash flow?
Similar, slightly differ. Cash flow, fund flow is a working capital. Cash flow only cash. What cash inflow, cash outflow. That's it.
Okay.
Small difference is there. I teach you. I tell you. Okay.
Okay.
So this when you are preparing this fund flow statement, you have to analyze the difference, changes in between the two balance sheet dates. Okay. So one fund flow I have given here. Working capital funds flow indicates the flow of working capital between 2 points of time. It involves information or what I have explained, I have given it here. Okay. See here, this is the movement of fund, inflow of fund, what are the sources of fund, outflow of fund, what are the utilization of fund, issue, how you are getting fund to your business, issue of share capital, issue of debentures or bonds, getting a bank loan, sale of fixed assets and investments, operational profits, decrease in working capital. These are all the inflow of fund. What are the outflow of fund? How that is utilization of fund. Redemption of preference shares and debentures. Redemption means repayment. Repayment of preference share capital and debenture capital or bond. Repayment of bank loan. Purchase of fixed assets and investments. Payment of taxation and dividend. Increase in working capital. These are all outflow of fund. Right? So what are the managerial uses of fund flow statement? Why we are preparing this fund flow statement? The utilization of fund flow statement to see the reasons for changes in assets and liabilities. Why assets and liabilities changed? Why is it purchased or sold out or you are issued the share capital? Why? What is the reason of changes of this working fund inflow or outflow between the two balance sheet dates? This fund flow statement gives the detailed fund obtained in the used in the past. So these are all the uses, utilization of available resources. You can identify strong and weak financial areas of the firm. And then formulate the financial policies and dividend policies, bonus issues. Then it is a control devising mechanism for budgeting figures. So these are all the uses, limitations of fund flow statement. So what are these are all the limitations, that is data which you are based on historical data, that is final statements are based on historical data. Non-cash items also are involved. So for calculations, if it is wrong data provided, everything goes wrong. That is a limitation. Then past year's performance based on the future. So you have to prepare projected fund flow statement, that is not a accuracy one, right? Then it cannot gives you the continuous changes. So only 2 years balance sheet that reflects the changes in working capital. So it is a substitute of your financial statement. It is not a main statement. It is a substitute. These are all the limitations. Difference between fund flow and cash flow. It is wrong. That I will teach you later on. After teaching the cash flow, then only you can identify what is the difference. Okay. This one I will teach you later. What are the steps? Preparation of fund flow statement. There are two statements you have to prepare. One is schedule of changes in working capital or preparation of statement of working capital. Another one is fund flow statement. What is the preparation of changes in working capital? When you are preparing this schedule of changes in working capital, you have to take only current items, current assets and current liabilities. What is working capital? Current assets minus current liabilities are working capital. In this statement, you have to take only current assets and current liabilities. Okay. In fund flow statement, you have to take only non-current item. What are the non-current item other than current assets? That means fixed assets. Fixed assets and then liabilities, capital and other liabilities, long-term liabilities. That you have to, that only that items you have to enter under fund flow statement, right? Then we have to prepare adjusted profit and loss account to find the funds generated from the business. Funds generated from the business. That is generally in profit and loss account, we can ascertain only net profit. Net profit, how you are getting net profit? After deducting all non-cash and non-trading losses or expenditure and incomes, right? So what is non-cash and non-trading income? Say for an example, depreciation, provision for bad debts. These are all non-cash expenditure. Really, you are not giving cash, but you are treating it as an expenditure when you are preparing profit and loss account. So these are all non-cash expenditure that will not give you the true picture. So we have to add back, adjusted back with the net profit to find the profit or loss are generated from funds generated from your business. Okay. Similarly, profit or loss on sale of machinery. It is a fixed asset, not related to your sale proceeds, right? So the income which is are irrelevant to your business transaction, that is called non-trading income and non-trading expenditure. So these are all the things you have to adjust with the net profit. You will find out what is the funds generated or operated from your business, right? That we have to find out. Then we have to prepare some ledger accounts to adjust what is the some items will be given in your problem. So some items we have to find out. For that we have to prepare some ledger accounts, right? While doing the problem, you will understand. Then finally, one more important thing is provision for taxation and proposed dividend. These two items we can treat either current item or non-current item. If you are treating it as these two are current item, we have to take only in the schedule of changes in working capital. Nowhere you should not take. Okay, you should take. Suppose if you are treating it as a non-current item, you should eliminate in while preparing the schedule of changes in working capital. But when you adjust in adjusted profit and loss account and then final fund flow statement, everything we have to make. If you do the problem, you will understand, right? This is the fund flow statement specimen, sources of fund, applications of fund. Sources, what are the issue of share capital, issue of preference shares, issue of debentures, loan borrowed, sale of fixed assets, sale of investments, non-trading incomes, fund from operation, decrease in working capital. Here, this is the answer. Decrease or increase the working capital, that you have to find out. Okay. Applications or utilization of uses of fund. So what are the applications or uses of fund? Purchase of fixed assets, purchase of investments, redemption or repayment of shares, redemption of debenture, repayment of loan, payment of taxation, payment of dividend, non-trading losses. So these are all the, suppose if your sources of fund exceeds your uses, that balancing figure is called non-trading, that is increase in working capital. Okay. Funds from operation you have to write in the sources side. For suppose funds lost in the operation, that you have to write under the uses of fund side. Okay. Next one. This is the schedule of changes in working capital specimen. Schedule of changes in working capital, you have to take only current assets and current liability. Current assets you have to take 2 years figure, previous year, current year. What is the difference? So suppose current asset, cash in hand 10,000 previous year, current year 15,000. Is it increase or decrease? 5,000 increase. So while preparing this schedule of changes in working capital, you have to keep it in your mind 4 things. The effect of increase in working capital, the effect of working capital will be increased. Decrease in current assets, the effect of working capital will be decreased, right? Increase in current liability, reverse. Increase in current liability, the effect of working capital will be decreased. Decrease in current liability, the effect of working capital is increased. See here, see this picture.
Ma'am, can you repeat it, please?
See here, when your current assets increased than the previous year, current year current assets increased than the previous year, the effect of working capital will be increased. Current assets increased means effect of working capital will be increased. Current assets, if it is decreased, the effect of working capital will be decreased. But when the current liability, reverse case effect, if current liability is increased, the working capital effect will decrease, right? So current liability, if it is decreased, your working capital will increase. right? So this is the effect of working capital. This thing you have to keep it in your mind while preparing this schedule of changes in working capital statement.
Excuse
Okay?
me, madam. Screen is not visible.
Yeah?
The screen is not visible, madam.
Not visible. Yes, it is visible.
No, it is visible to us.
Can you see others?
Yes,
Yeah,
yes,
ma'am.
No,
yes,
it is
ma'am.
visible.
Yes.
It's visible.
See here. Next one. So this is the effect of working capital, right? Then adjusted profit and loss account, we have to prepare to find the funds generated or operated from the business. So how to prepare profit and loss account, ledger accounts we used to prepare, right? So you have to bring the opening balance of profit and loss account will be given in the balance sheet. Balance sheet liability side or profit and loss account will be given, right? Previous year will be the opening balance, current year is the closing balance. So you have to bring by balance brought down, opening balance of profit and loss account, you have to write it here. By non-fund items, that is non-trading and non-fund items. What are the non-interest received, dividend received, refund of taxation, profit on sale of fixed assets? These are all the non-fund and non-trading profit that you have to adjust it. Left side, to funds, non-fund items. What are all the non-cash and non-trading items? What are all the depreciation? Depreciation of asset, depreciation of furniture, whatever it is. Then loss on sale of fixed assets, premium payment on redemption of debentures, discount on issue of shares, write off intangible assets, that is goodwill, patents, trademarks. If you have write off, that also non-cash item. Then write off fictitious assets, preliminary expenditure and advertisements are called as fictitious assets. To appropriation or provision for bad and doubtful debts, provision for any depreciation. So that you have to write it here. General reserve, transferring to general reserve, transferring to debenture sinking fund, proposed dividend. When you are treating proposed dividend is a non-trading item, sorry, non-current item, you have to take it here. Proposed dividend, interim dividend, taxation provision. So all these items you have to bring it. Closing balance you have to write it here. Find out what is the funds generated or operated from your business. When you are debit side of adjusted profit and loss account exceeds your credit side, that is funds from operation, that we have to find out. Okay. Then these are all the adjustment entries I tell you later on. Depreciation, dividend paid. When you are preparing the problem, you will understand, right? So let us see this problem. The following are the summaries of the balance sheets of Bharat Vijay Limited as on 31/12/2009 and 31/12/2010. The following additional information is obtained. The net profit for the year was rupees 40,000 after charging depreciation. During the year, depreciation charged was rupees 30,000 on building and 40,000 on machinery. The company purchased during the year buildings worth 1,60,000. Dividend paid during the year 20,000. So these are the balance sheet previous year 2002 and 2003 liabilities and assets are given, right? You are required to prepare the statement of sources and applications and schedule of changes in working capital, right? In your examination point of view, if they are asking you to prepare only statement of sources and applications, means you can prepare only fund flow statement, that is enough. No need to prepare schedule of changes in working capital. Specifically, if they ask to prepare schedule of changes in working capital, you have to prepare. Let us prepare both the statement, you will understand, right? See here, this is the format. Statement of changes in working capital, 2002 and 2003. Yeah. See here, assets. Only you have to take current assets. Current assets, what are they? Stock, 90,000 and 80,000. See here, stock previous year 90,000, current year 80,000. Is it how much is increased? Increased or decreased? Stock is increased or decreased? Previous year is
Decreased.
90,000,
Yeah,
current year
decreased.
80,000. So decreased. What is the effect of working capital? Decrease in current asset, working capital will also decrease. Right? Decrease in current asset, the effect of working capital will also decrease. In the decrease column, you have to write 10,000. Only the difference amount you have to write. Okay. Then next, debtors. 1,40,000, 2,40,000. Increased na, decreased na. 1,40,000, 2,40,000. 1 lakh.
Increase.
Increase in debtors, 1 lakh. So effect of working capital is 1 lakh. Right? In the increase column, we have to write 1 lakh. Then prepaid expenses. Prepaid expenses is also a current asset. Previous year 15,000, current year 25,000. That means 10,000 increased. So increase in working capital, you have to write 10,000. Now you total your current asset. Total current asset is previous year 2,45,000, current year 3,45,000. Now you bring the current liabilities. So what are the current liabilities? Creditors. Creditors 70,000 and 80,000. See here, 70,000, 80,000. So current liability increased. Then what is the effect of working capital?
Decrease in working capital.
Decrease in working capital. Very good. So 10,000 you have to put in the decrease column. Okay. Then next one, bank overdraft 25,000, 25,000. No effect, zero effect. Then provision for taxation. Provision for taxation 30,000, 40,000. So in this case, provision for taxation and proposed dividend, you can treat either current or non-current. It is up to you. If you are treating it as a current, you write a note. I assumed you to take provision for taxation and dividend as a current item. If I am taking as a non-current, you have to write assumption. Okay. But here, let us take current asset. Once you are treating it as a current asset, you should take only in this statement of changes in working capital. It will not reflect in your fund flow statement. I will tell you both the treatment, how you are getting, right? See here. Provision for taxation 30,000, 40,000. So current liability decreased. Current liabilities are increased. Current liability increased means effect of working capital decrease, isn't it? Provision for taxation 10,000 increased actually. So effect of working capital you have to put in the decrease column. So now you make a total current liability. Total current liability is what? What is your current liability? 1,25,000 and 1,45,000. Now find out working capital. What is working capital? Current asset minus current liability is the working capital. Current asset minus current liability is the working capital. 2,45,000 minus 1,25,000. So working capital for the year 2002, 1,20,000. 3,45,000 and 1,45,000. So working capital for the year 2003, it is 2 lakhs. So totally working capital 1,20,000 and 2 lakhs. Okay. Now you see the difference. What is the difference? Previous year working capital 1,20,000. Current year it is 2 lakhs. So what is your increase in working capital?
80,000.
80,000. Increase in working capital 80,000. So totally it is 2 lakhs. Okay. See here. Now you total the increase column and decrease column. Increase column shows 1,10,000. Decrease column only 30,000. 1,10,000 minus 30,000. So increase in working capital is 80,000. So both the things will be the same. Otherwise, you might have done some mistakes. Okay. Right? So your working capital, increase in working capital 80,000. Okay. Now, we have to prepare fund flow statement. Before preparing this fund flow statement, we need to find out fund flow, funds from operation or funds generated from your business, right? For that, fund flow statement, open it, prepare sources of fund, applications of fund, leave this space. Let us prepare all the adjustment. After that, let us come to there. Okay. Now we have to prepare adjusted profit and loss account, right? So we have to see the problem. Profit and loss account, opening balance 40,000 and 60,000. See here, bring it here. Opening balance, by balance brought down 40,000 opening balance, closing balance to closing balance 60,000. Okay. Adjusted profit and loss account, you have to prepare, bring the opening and closing profit and loss account. Okay, opening balance by opening balance. First is the opening balance. Closing balance you have to write under the last item. Okay, then you have to write off all the non-cash expenditures. So what are all the non-cash expenditures? That is depreciation. Depreciation is how much? Depreciation on building. We do not know. We have to find out. See here. Machinery 3 lakhs, 2 lakhs 40,000. Buildings 1,20,000, 2,50,000. See the informations what are available given. Depreciation charged 30,000 on building and 40,000 on machinery. So straight away it is given. So depreciation to depreciation, building 40,000, machinery 30,000, 40,000. Total depreciation 70,000. Right? Then next, is there any other adjustments? Dividend paid during the year 20,000. So dividend we have not taken. It is only dividend generally declare, after that only they will pay. While declaring, we have to write off in the profit and loss account. And while preparing profit and loss account, we have to we used to write dividend. It might be deducted. So that we have to add back. So dividend paid 20,000. We have to, the interim dividend and dividend paid you have to write under adjusted profit and loss account debit side. Okay, then closing balance. Now you close this account. When your debit side exceeds your credit side, that is called funds generated or funds from operation. Right? This funds from operation is one answer, part of your answer. Okay. Funds from operation is 1,10,000. Leave it. Now we have to prepare building account, machinery account. Why we have to prepare building ledger account and machinery ledger account? Why? Because whether during the year, whether you have purchased or sale of this machinery or building, how to find out? Building ledger account, prepare it. You know very well, all the assets are having debit balances. All the liabilities are having credit balances. So opening balance, when you are preparing adjusted profit and loss account, you are bringing into the credit side by opening balance. Okay. So when you are bringing the assets, opening balance, you have to bring debit side to balance brought down or opening balance, that is building. See here, previous year, building is 1,20,000, 2,50,000. See here. 1,20,000 is the opening balance. By closing balance, 2,50,000. Depreciation. When you are charging depreciation on building, what is the journal entry? Depreciation is expenditure. You have to debit. So depreciation account data to building account. So building account credit side, by depreciation 30,000 you have to write. Right? So the balancing figure 2,50,000. That is 30,000 depreciation. So totally 2,80,000. So how much it is? The remaining balance is 1,60,000. That means what? During the year, additional building you have constructed during this year. This 1,60,000 is constructed or purchased during the year. So totally 2,80,000. Okay. So when this one 1,60,000 you have to bring. Where you have to bring when you are preparing the fund flow statement. Purchases of building is a utilization, right? Utilization of your asset, uses of your asset. So purchases of building right under applications of fund or uses of fund side 1,60,000. Okay. Dividend paid, all the adjustment it will you have to enter in two places. One is adjusted profit and loss account, here fund flow statement. Dividend paid, fund outflow, right? So you have to write dividend paid also in the application side. Then you see machinery account. Similarly, machinery account, opening balance, closing balance, by depreciation 40,000. Only that much. There is no purchases. So no, leave it. If there is any purchases or sale, suppose sale of machinery, if it is there, you have to write it by bank, cash or bank account. Sale, how much you have to write. Then what is the purchases balancing figure you have to find out, right? So here, see here, see the non-current items from the liability side. Non-current items, what are they? Issue of share capital. 3 lakhs is there, current year 4 lakhs. That means what? 1 lakh you have issued during this year. By issue of share capital, you have received inflow of fund 1 lakh. Okay. So sources of fund you have to write equity share capital. Issue of equity share capital 1 lakh. Okay. See the debentures. 2 lakhs, 2,50,000. So 50,000 issued bond or debentures. So issue of debentures you have to write sources side of fund flow statement 50,000. Right. Then funds from operation you have calculated here 1,10,000 funds from operation. This is not profit. Funds from operation. Okay. This funds from operation is 1,10,000. So if your sources side exceeds your application side, that balancing figure is called increase in working capital. Suppose your applications of fund increased, excess of your application of fund exceeds your sources of fund, that balancing figure is called decrease in this side. If you get decrease in working capital. So see here, when you are preparing fund flow statement, also increase in working capital 80,000, right? Similarly, in the see here, statement of changes in working capital also you have calculated 80,000. Same answer. Whether you are preparing statement or fund flow statement, schedule of changes in working capital or fund flow statement, you will get the same answer. This is the way of method of preparation of fund flow statement. Okay. Do you understand? Suppose, let us say, here instead of taking a provision for taxation, I already told you we are treating it as a current. Suppose this provision for taxation, if you are treating it as a non-current item, what will happen? Let us see. So this one you eliminate. Okay. So 30,000, 40,000, if you are eliminating here, what will happen here? Only 95,000. Right? You can do both the method. It's not a issue. Okay. Here what will happen? 1,05,000. Right? What is the working capital? 2,45,000 minus 95,000. So what is working capital? 1,50,000. Here 2,40,000. So increase in working capital is how much? T plus 40, 90,000. Okay. Here, this one you leave it. This 10,000 leave it. What will happen here? 20,000. 1,10,000 minus 20,000, 90,000. Your increase in working capital will be 90,000. If you are treating provision for taxation as non-current. Okay, so here how that provision for taxation, how you are bringing into this account. So adjusted profit and loss account, see here in the adjustment what is given, taxation, how much you have paid during this year, anything, some clue will be given. Only dividend, depreciation, net profit, buildings, nothing is given. So in that case, what you have to treat, previous year provision for taxation, already it is provided. Now you are paying. Payment of taxation you have to assume. Current year taxation is provided during this year, provided from your profit. Okay, so you have to prepare one ledger account. Adjusted profit and loss account. What you have to write, see here. Shall I use this box? Yeah. Provision for taxation account. Okay. So by opening balance, taxation is a liability. So opening balance, right in the credit side. Okay, for your understanding, I am preparing. Okay. Opening balance 30,000. Opening balance 30,000. Yeah. To closing balance 40,000. In your adjustment, suppose tax paid during the year. If it is given, what is the entry you have to write? Tax paid means cash to be credited, right? Profit and loss, provision for taxation account data to cash account, right? So now nothing is given. What you have to do? This 30,000 we are paying, cash paid during the year. This 40,000 we can treat as provided during this year. So this 30,000 we can write it here to cash paid during the year. Paid during the year. Dividend paid. Okay. To cash. Dividend paid during, tax paid during the year. 30,000. Current year taxation we are providing. So we have to eliminate from adjusted profit and loss account by adjusted profit and loss account. Adjusted profit and loss account, that is 40,000. Right? This adjusted profit and loss account, this amount we have to write in the adjusted profit and loss account. See here. Here, to provision for taxation provided during the year. Provided, not paid. Provided during the year. 40,000 you have to write it here. So now how much it is totally now? 1,90,000. So funds from operation is instead of 1,10,000 it is 1,60,000, right? 1,60,000. So now you come to the fund flow statement side. Instead of 1,10,000 it is 1,60,000. Credit side you have to write, application side you are tax paid you have to write it here. Tax paid. during the year. How much you are paid? 30,000. You have to write it here. Okay. So now how much it is? 3 lakhs 10,000, right? 3 lakhs 10,000. So here 180 plus 30, 210. Provided during the year 40,000. Okay. Opening balance, wait. What 30,000, 40,000, correct? Yeah? So 30,000 paid. Okay, we have written correctly. 80. Now you total this one. 90 plus 1 lakh, 1,90,000 minus 40, 1,50,000, not 60,000. Made mistake here. So funds from operation 1,50,000. Here 3 lakhs. See here. What is the difference? 90,000. 1 lakh 60, 80, 2 lakhs 10,000. So 90,000 is the increase in working capital. Can you make difference? Do you understand? See here also 90,000, here also 90,000 will be the same answer. If you are treating provision for taxation as a current item, your increase in working capital is 80,000. If you are treating provision for taxation is a non-current item, your increase in working capital will be 90,000. Both the answers are correct. You have to write assumption, right? Do you understand? Any doubt?
No, ma'am, it's okay, ma'am.
Huh?
Understood.
No, ma'am.
Do you understand this?
Yes, ma'am.
Yeah.
Okay. Let us do some more problem. You will understand. Huh? See this problem. From the following balance sheet of Bhairav Limited, prepare a statement of changes in working capital and sources of application. If your 20 marks problem, if they are asking both the thing, you can prepare both the statement. If they are asking to prepare only sources and application, no need to prepare schedule of changes in working capital. Only this one you can prepare. If they are asking this one, you have to prepare only that one. Okay, no need to go this one. So during the year taxation, interim dividend, everything it is given. Only the final dividend, the proposed dividend only you can treat current or non-current. But interim dividend, definitely you have to write only in the adjusted profit and loss account as well as user side of the fund flow statement. Okay, that you have to be very careful. See this problem, let us do. This is the balance sheet, opening balance, previous year and current year are given. Okay. See here, 2010 and 2011. Here it is. First, let us prepare schedule of changes in working capital. The spelling mistake is there, you make it correct. See here, current assets. What are all the current assets? Cash at bank, debtors, sundry, advances, stock. These 4 items are current assets. Okay, bring it here. Current assets, stock. Previous year is 1,11,040. Current year 97,000. 97,370. So the difference is 21,640. Actually, stock is decreased. The effect we have to write in the inner column, increased column, increased. But see here, one more adjustment is given here. The assets of another company were purchased for rupees 60,000. payable in fully paid up equity shares of company. The assets consisted of stock 21,640, plant 18,360, and the remaining amount was for goodwill. That means what? When you are purchasing some other company, you have to take over assets and liabilities of that company, merging or purchasing decision. That company's share capital, sorry, assets and liabilities you have taken, right? So you have purchased when your company issued shares 60,000 equity share. For that you are taking over that company's stock this much, plant and machinery this much. So total these two remaining how much will come? 21,640 plus 18,360 minus 60,000. How much comes? Calculate. 21,640 plus 18,360. So 40,000. So 20,000 you are transferring to goodwill account. See here, your issue of share capital 60,000 increased. 2 lakhs here, 2 lakh 60,000. You are issued not for cash, or it is a you are issued equity shares for purchase of business of other company. But while you are purchasing of other company, you are take over the assets. Only stock and plant and machinery you have taken. Remaining amount you have to credit the goodwill account. Okay. See. That is why 21,640 it is you have take over the asset. It is not that is why you should not put increase or decrease column. Okay, correct stock is this much. You are eliminating this 21,640 from this. You eliminate it. So now the current stock is 75,730. So how much it is decreased? Because this is purchase consideration. Purchase consideration you eliminate it. You have issued at shares. So now deduct this original stock. Your company stock is 75,730. So difference is 35,310. It is decrease in working capital. So you are working decrease in stock will also decrease in working capital, right? Cash at bank increase, so put in the increase column. Sundry advances decrease, put in the decrease column. Debtors, it is decreased, you have to put in the decrease column. Now total the current assets, then current liabilities. Current liabilities, that is bills payable, decrease, put in the increase column. Creditors, increased, put in the decrease column. Creditors, there is no zero in the 2011. So that means what? Repayment of all creditors. So you have to put in the increase column. Then total current assets, find out working capital. Current asset minus current liability is the working capital. So what is the increase or decrease in working capital? $31,000. You add with this, 1 lakh 30,000, 30, 130. Right? Let's see. Fund flow statement. Fund flow statement and adjusted profit and loss account. You provide, prepare the answer sheet 1 page. Then workings you prepare after that. Okay. So then you have to fill it in. Okay. Fund flow statement in this. What are the things you have to write? See your balance sheet. Liability side 2 lakhs, 2 lakh 60,000. 60,000 generally we used to say it is a issue of share capital, fund inflow. We used to write it as a fund inflow. Here you have made it as issued your shares for purchase consideration. Purchase consideration. So you here in sources side you should not show as a fund increase issue of share capital. If it is issued on cash, now you have to write issued at Issue of equity share 60,000. Here, purchase consideration. For that, you have purchased stock and machinery. So that you have to leave it. Okay. Then, purchase of machinery. See here. Any other long term liabilities? Nothing. Only this one. Then, provision for taxation. Whether we can treat it as non-current, right? Let us treat it as, here we have not taken, so let us treat it as non-current. How it will appear, I will tell you, right? Then land and building, 1,48,500, 1,44,250. There is no purchases. If it is land and building, it is reduced, means depreciation. We can treat this amount as depreciation, or you can prepare ledger account, you can find out. Similarly, plant account, it is 1,12,000, 1,16,000. So depreciation we have to deduct and find out what is the purchases of plant and machinery during this year, right? See here. Equity, see here, equity share capital, ledger account you prepare, opening balance, by balance brought down 2 lakhs, by instead of issuing share capital 2,60,000, see here, 2,60,000 is the closing balance, opening balance 2 lakh. This 60,000 you have purchased machinery 18,300, stock 21,640, sorry, machinery 18,300. Sorry, 18,360. So goodwill 20,000. Right? So this share capital account over. Machinery account, you bring the opening balance to 1 lakh, to bringing the opening balance machinery account 1,12,950. To machinery account, that is 18,360. On you have purchased for not cash, it is equity share you have purchased. So here business purchase, that, or you can write it here to equity share capital account, equity share capital account. Journal entry is equity share capital account. That is machinery purchase for the purchase consideration of equity shares, 18,360. So by depreciation loss, depreciation is it given in your problem? See here, depreciation on machinery. Dividend paid 35,000. Depreciation is not given. So balancing figure. This is the closing balance. This is opening balance, and current year you have purchased. Then purchases of machinery is given here. 5,000 during the year. You have purchased 5,650 for plant, right? So here you have to write to cash or bank account purchase during this year 5,650. So totally 1,36,960. Your closing balance is 1,16,200. So remaining this one is to be treated as depreciation. So depreciation is to be transferred to profit and loss, adjusted profit and loss account. Adjusted profit and loss account. This is depreciation on machinery, right? Then you have to prepare provision for taxation account. Provision for taxation is a liability. Opening balance bringing to the credit side. By balance brought down 40,000. Closing balance, sorry, 50,000, 40,000, 50,000. See your problem. Here clue is given. During the year, taxes and interim dividend paid 35,000 and 95,000 respectively. That means what? Tax paid during the year is given 35,000. So tax paid 35,000. You have to write it here. To tax paid 35,000. So what is the tax provision for taxation made during the year or provided during the year? That we have to find out. So this side you total it 85,000. This balancing figure, this 45,000 is provided during this year or made during this year. This amount you have to write it in the adjusted profit and loss account. Adjusted profit and loss account. This is provision for taxation made during this year. This 40, see here, this adjusted profit and loss account by balance brought down. Opening balance 39,690. Closing balance you bring it here. Then write it here to provision for, see, balance sheet reserve 50,000, current year 55,000. So that means what? Transferring to reserve account 5,000. So that you have to write it here, transfer to reserve account 5,000. Then goodwill. Goodwill, see here, we have calculated here 20,000, isn't it? Goodwill. 21,640 plus 18,360, totally 40,000. Your purchase price of your business 60,000. 20,000 is goodwill. So you are writing off goodwill 1,000. Right? See here, goodwill account balance sheet asset side shows 19,000. That means what? Instead of showing 20,000, 19,000 only is showing. That means 1,000 writing it as write off the goodwill. It is a fictitious asset. Advertisement and then goodwill and patent rights, copyrights. So after some period, we may write off every year as an expenditure. So that goodwill written off, we have to write it in the adjusted profit and loss account 1,000 rupees. Do you understand how you are getting 1,000 rupees? Or you can prepare ledger account. It is only one item, no need to prepare. If you want to prepare, you can prepare, no issue. Right? So write off goodwill 1,000 rupees. Provision for taxation made. We have calculated here 45,000. Made, you have to write it here. Paid, you have to write in the fund flow statement. See, tax paid 35,000. This is given in your problem itself. Okay. Then interim dividend, you have to write both the profit, adjusted profit and loss account debit side as well as application side. The interim dividend, this is provided and paid. That is 39,000 you have to write. Then depreciation on land and building 4,250. This we have calculated here. Depreciation on machinery we have calculated with closing balance. So your adjusted profit or funds from operation. This is called funds from operation. Or we can say it is an adjusted profit. Funds from operation is 1,11,540. This funds from operation you write in the sources side of fund flow statement 1,11,540. Application side, purchases of machinery, cash purchases only you have to write. Equity purchases you should not write. Okay. Tax paid you have to write. Interim dividend paid. Then working difference between this amount, that is called increase in working capital. Suppose sources side, excess of your sources side than your user side of your fund. That is called increase in working capital. This is the statement. This is the final answer statement. So now you compare from your schedule of changes in working capital. Here increase in working capital 31,890. Same, huh? Okay, ma? It should be same. Otherwise, you might have done some mistakes. Right? Do you understand this?
Yeah.
Then we go cash flow statement.
Yeah.
If you have any doubt, you
Yes,
can ask
ma'am.
me. Yes.
Ma'am, if it is working capital increases, profit may also increase, no?
Profit. Adjusted profit.
Yeah.
No connectivity of profit and working capital. Sometimes your profit and loss account may also show loss. See here, profit and loss account previous year 39,690. Here 36,220. So when you are preparing, adjusting all non-cash and non-trading expenses, Whether you are getting funds from operation or funds lost in operation depends upon the items what you are writing, right? Right? It doesn't mean when you are getting profit, it will be increase in working capital. If it is loss, it will be decrease in working. It is not like that. That is different. Profit and loss is different from your working capital. Okay. Okay. Let us see cash flow statement. So here, cash flow statement, same thing, but in fund flow statement, we are preparing two statements. We are dividing into two separate things, that is current item and non-current item. In cash flow statement, we are preparing only one statement. In that, all current item or non-current item, everything we are going to take together, right? So here we are finding only the what is cash changes in cash. Cash inflow, what is the cash inflow? What is the cash outflow? How much increase in cash? How much decrease in cash? That's all. So how much opening cash balance, closing cash balance? What is the cash position? So the cash flow statement is prepared to know the cash position, changes in cash position between two balance sheet periods. That is cash flow statement. Okay. See, in cash flow statement, we can divide all these activities into operating activity, investing activity, financing activity. This is the cash flow statement. Our traditional, there are 2-3 methods are there. For preparation of cash flow statement, if you are preparing under this accounting standard revised method, you have to prepare operating activities, how much cash, investing activities, how much, financing activity, how much. Then finally you have to take together. So this is traditional method. How we have prepared fund flow statement, similar method, slight changes, that's all. It is easy method for your understanding. Okay. So left hand side, sources of cash. Here uses or applications of cash. Right? Same thing. Fund flow statement, how you are preparing, same thing. But here you have to start with opening cash balance. Sources side you have to start with opening cash balance. End with the closing cash balance. Closing cash in hand and cash at bank. That is called cash balance. Okay. Opening cash in hand and bank balance. Closing cash in hand and bank balance you have to close in the user side. Only these two differences. The remaining sale of investment, sale of fixed assets, raising of loan, all these things like fund flow statement, how you are preparing, same thing. Asset side is how you are preparing purchase of investment, purchase of asset, payment of dividend, payment of taxation, repayment of loan, all these things same. Only you have to write it here. There we have find out funds from operation. Here you have to find out cash from operation. This cash from operation you have to write it under the sources of cash side, sources side. We used to say sources only, not to say sources of cash. Sources, this is uses, right? Sources side we have to write cash from operation. If it is a loss, minus figure, bank overdraft if you are having, that is cash lost in operation. That you have to write under the applications or uses side. Okay, this is the statement, right? Here, provision for taxation and dividend, you have to treat it as usual non-current, no current, no treatment of our current item. Okay, let us do this problem. You can understand, right? See here, during the year, 26,000 paid as dividend. Provision made for depreciation, so 27,000 and 36,000. 3-year balance sheet, 2005 opening balance, closing balances are given, right? Now this is the solution board. Cash from cash flow statement you prepare, right? This is before that you have to prepare cash from operation. Cash flow statement, that is sources, uses. We need to find out cash from operation. Cash from operation, what you have to find out? As usual, how you are preparing funds from operation. First you find out funds from operation. Then you have to add increase in current liability and decrease in current asset. Add increase in current liability and decrease in current asset, and deduct increase in current asset, decrease in current liability. Reverse. If you adjust these four things with this funds from operation, that is called cash from operation. Okay, funds from operation. See here. Cash from operation. Here, funds from operation, add increase in current liability and decrease in current asset. Okay, less reverse, decrease in current liability and increase in current asset. Okay, this one you have to keep it in your mind. Why we are adding increase in current liability,
Okay.
decrease in current asset? Why we are adding? That logic, if you understand, you will not get confusion. What is that logic? What is that logic? Why we are adding increase in current liability, decrease in current asset? When you are getting, what is current liability? Say for an example, loan, short-term loan you are getting. So when you are getting loan, what comes in?
Cash comes in.
Cash comes in. Previous year 10,000 is there.
ఒక
Current year
5
it is 30,000. Okay, 20,000 increase. That means what? You have received loan this year, right? When you are receiving loan, what comes in? Mute. Listen others.
నాకు చూస్తే అవి చూస్తే సరిపోతాయి అనిపిస్తుంది. వినయ్ ఏమో సరిపోవు అంటున్నాడు.
Somebody is talking. Mute your mic.
మళ్ళీ దానికి ఒక పెద్ద
नमस्कार बेटा कहाँ कुर्चू
ప్రైమరీ వాళ్ళకి 5 కావాలి.
दीजू
Hello.
एचएनसी ना गादी दीजू बाकी कहाँ
Important thing I am teaching. Somebody is talking. Mute your mic.
వాళ్ళు కూడా తెప్పిస్తున్నారు. ఉన్నాయి మాకు ఇచ్చేయండి, వాళ్ళు కావాల్సిన మొత్తం
हेलो कहाँ ना कुर्चू एचएन बोली कुर्चू
Ma'am, they not even know they are speaking in.
Madam, can I ask Sivarama to
कहाँ इंटरव्यू पे लू की कहाँ मतलब कहाँ है ला
శివ యారో పేసరా
ఇప్పుడు వాళ్ళది ఉన్నాయి మాకు ఇచ్చి మేము రెడీ చేసి పెట్టేసుకుంటే, ఎందుకంటే
You can mute them, ma'am.
స్టార్టింగ్
Ma'am, if you are admin, you can mute them, ma'am.
ना बेटा तो ते तो बुझे को ये इनका ना सुन और इंदा चुना को लेकर ना करना
Ma'am, if you are admin, then you can mute them.
mana buda budi boslu na हम कर ले
That's why I am trying.
घर द्वार जमी बाड़ी हम
Okay, ma'am.
Yeah, another name is me. Okay, ma'am.
Right. So what I thought, so totally disturbing.
Cash comes in, ma'am.
When you are receiving loan, cash comes in. That is why you have to add. When you are finding cash from operation, cash inflow, you have to add. Decrease in current asset means what? When you are selling your asset, stock, such stock is decreased. That means what? Sale of your asset, stock. Cash comes in, isn't it?
Yes, ma'am.
So that is why we are adding the decrease in current asset. Say for an example, data previous year 40,000, current year 30,000. That means what? 10,000 collected, received cash, isn't it? So cash inflow you have to add. If you understand this logic, no need to by heart. So increase in current liability and decrease in current asset you have to add for finding cash inflow, cash from operation. You have to deduct reverse, decrease in current liability. So when your current liability is decreased means what? Repayment. Cash goes outside, right? 40,000 previous year. Current year it is 20,000. That means what? 20,000 repaid. Cash outflow. Cash outflow to be deducted, right? Increase in current asset. Increase in current asset means what? Debt are increased. That means sale of your stock, but you have not yet collected, right? So it is cash outflow. Outflow you have to deduct. Inflow you have to add. Do you understand this? Funds from operation plus increase in current liability and decrease in current asset, deduct decrease in current liability and increase in current asset. If you do this adjustment, that is called cash from operation. Okay. See here in this problem, see current asset, cash leave it, cash in hand and cash at bank you have to write only in the preparation of cash flow statement, opening cash balance, closing cash balance. That you should not take it here. Only debtor, stock and other current assets you have to take. Debtor 35,000 is here, 38,400. See here, is it increased or decreased? 35, 38. So increase in debtor. Increase in debtor means current asset. Increase in current asset, you have to deduct or add. Increase in debtor. Debtor is increased, current asset is increased, deduct. Okay. See here, stock 25,000, 22,000. So 3,000 decreased. So decrease in current asset you have to add. Decrease in stock you have to add. See here, creditors 36,000 and 41,000. So how much it is? 5,000 increased. Increase in current liability you have to add. Increase in current liability add. So add increase in current liability and decrease in current asset. Deduct decrease in current liability and increase in current asset. So if you do this adjustment, that is called cash from operation. This cash from operation you have to write in the cash flow statement sources side. Sources side, that is 40,600, that you have to write it. Okay. Funds from operation you have to adjust it here. Then see here, long-term loan in your balance sheet. Loan from partner, that is 20,000. Previous year 0, current year is 20,000. Loan from bank 30,000 and 25,000. So 25,000 means 5,000 reduced. So loan from repayment of loan to bank, it is a user side. Repayment of bank loan 5,000. From partner, loan from partner raised. So sources side 20,000 you have to write it here. Then similarly, purchase of land 20,000, 30,000. Land if it is increased means purchases. Building is increased 5,000. Suppose depreciation if it is here, you have to prepare ledger account. Depreciation for machinery, provision for made for depreciation. It is opening balance of depreciation 27,000 and closing balance of depreciation 36,000. So depreciation, if it is given provision for depreciation given separately, that your asset account will show only on the purchase value, not the book value. Book value means cost minus depreciation, that is called book value. Okay. So book value is not shown. It is a original value is shown. So let us prepare ledger accounts, then only you will understand. Machinery account, opening balance to balance brought down 80,000. Closing balance is 86,000. See here. Machinery account 80,000, 86,000. Right? machinery account 80,000 and 86,000, right? Then provision for depreciation, opening balance it is given 30,000 and 27,000. See here, sorry, opening balance 27,000 and 36,000, and then purchases made is not given. See here, previous year depreciation, write it here 27,000. Close. Otherwise, you can take instead of like this. Previous year it is 27,000. Opening depreciation provision, closing depreciation provision 36,000. That means current year depreciation is how much? Depreciation provided during the year difference 9,000. Instead of writing this full value, depreciation during the year, depreciation on machinery, depreciation for the current year, that is 36,000 minus 27,000. That means 9,000. So in that case, no need to write it here. This one is not required. So you have made machinery purchases during this year. This is bank provision, sorry, balancing figure. Credit side, it is 86 plus 9. 95,000. 95,000. Right? So 80,000 is the opening balance. So this side you are getting 95,000. Balancing figure, if you are getting debit side, it is purchases made during the year. Suppose if you are getting balancing figure credit side, that is sale of machinery during the year. Okay, that you have to keep it in your mind, right? So bank purchases, that we have to write it in the cash flow statement user side. Purchase of machinery 15,000, right? Bank loan 5,000 repayment we have written. Then payment of dividend. Payment of dividend, it is given in your problem 26,000. Payment of dividend 26,000. Now see here, net profit before tax, what is given? See here, this is a partnership concern. So there is no profit and loss account given in your balance sheet liability side. So how to prepare adjusted profit and loss account? So what is the clue is given? Dividend is given. Generally, in case of sole proprietary concern or partnership concern, we used to take opening capital plus net profit minus any drawings, that will be the closing capital. That is the sole proprietary concern or partnership concern. We used to prepare balance sheet like this. In case of companies, nada issue of share capital. Okay, so in this case, the profit will not be given separately, or clue also not given. So how to find out net profit? See here, this is the, see here, I have given working notes. Net profit before tax, we do not know. What capital is given? One opening capital 1,48,000. Closing capital is given 1,49,000. So the difference between opening capital and closing capital is 1,000. What they have paid? 26,000 they have paid as dividend. Dividend means drawings. So drawings we have already deducted. So now you add it. So what, this is the 27,000 will be the net profit. Now you see, opening capital 1,48,000 plus net profit 27,000 minus drawings 26,000, closing capital 1,49,000. Okay, you have to find out what is the net profit. With the help of this net profit, we have to find out funds from operation. So here, no opening capital, opening profit and loss account balance, closing profit and loss account. In that case, what you have to do? Net profit plus non-cash and non-trading expenditure minus non-trading income you have to add, that is called funds from operation. Well, for the calculation of funds from operation, two method is there. One is we can prepare adjusted profit and loss account. When the profit and loss account opening balance and closing balance given in the liability side, you have to prepare adjusted profit and loss account. Sometimes net profit only will be given in your adjustment clue. So in that case, if you want to find out funds from operation, it is a horizontal method. Net profit plus non-cash and non-trading expenditure minus non-trading income, that is commission received, dividend received, profit on sale of asset. These are the things, if you deduct it, you can find out funds from operation. After finding this funds from operation, you have to find out cash from operation. For finding cash from operation, what you have to do?
Can you repeat that, madam?
Yes, ma? Yes.
Net profit from non-cash expenditure
Yes. Minus non-trading income. Non-trading income means income received other than from your business. That means commission received, dividend received, rent received, profit on sale of machinery. Adjusted profit and loss account credit side, what are you are writing, that you have to deduct. Adjusted profit and loss account debit side, what are all you are writing, that you have to add. That's all.
Okay, madam. Thank you.
Instead of opening and closing profit and loss account, here you have to take only net profit.
Okay, ma'am.
Right? Do you understand now?
Yeah.
Then
Yes, ma'am.
after finding the funds from operation, you have to add increase in current liability and decrease in current asset. Decrease in current deduct decrease in current liability and increase in current asset. So you can find out for cash from operation. This cash from operation, you have to write it in the sources side of cash flow statement. Okay. Do you understand? Any doubt? Can you make the difference between fund flow and cash flow now? In fund flow statement, we are preparing two statements. One is schedule of changes in working capital and fund flow statement. Here only one statement we are preparing, that is cash flow statement. Here we are dividing the cash inflows and outflows under operating, investing, and dividing. See here. For theory part, you can write it here. In operating activity, investing activity, financing activity. We can divide it like that. So here, opening cash balance and bank balance we are showing in the cash flow statement. In fund flow statement, we are not at all showing. It is treated as a current asset only. We should not take into the fund flow statement. Then here, cash from operation we are calculating. There only funds from operation. Current items increase and decrease we are adjusting with the funds from operation in case of cash flow statement. In case of fund flow statement, only finding the funds from operation. Current items will not be entered in anywhere in fund flow statement. That's all. The other remaining things as usual, as it is. Then provision for taxation and provision for proposed dividend. In fund flow statement, we can treat either current item or non-current item. Here in cash flow statement, we have to treat only non-current item. There is no current item. Okay. You understand this? Any doubt? Can we do one more problem? If you have any doubt in this, I will explain you. You can ask me. Anybody?
No, madam.
Okay, can we go for next problem?
Yeah. Yes, ma'am.
See this problem. We summarize the balance sheet of Bardes Limited 31/12/2005 and 2006. Additional informations are given. Investment costing 8,000 were sold for rupees 8,500. Tax provision made during the year 9,000. While reading the problem, you have to understand made or paid. Made means provided. You have to write under the profit and adjusted profit and loss account debit side. If it is paid means that paid amount you have to write under the user side of fund flow or cash flow, right? During the year, part of fixed assets costing 10,000 was sold for rupees 12,000 and the profit was included in profit and loss account. Okay. So you are required to prepare cash flow statement. So this is the liabilities and assets are given. Let us prepare cash flow statement. Prepare cash flow statement, sources and uses. Sources side opening cash balance, that is 1,49,000. Closing bank cash or bank balance 1,97,000. First you write that. Both the items you write that. Okay. Then leave this. Prepare adjusted profit and loss account. Adjusted profit and loss account, that is profit and loss account is given in your liability side. So opening balance and closing balance are given. 56,000, 68,000. So 50, see here. Opening balance to closing balance. Then you have to write all non-cash and non-trading expenditure in the debit side, all non-trading income right in the credit side. So, right? What is the non-cash item? That is provision for taxation made during this year is given. Made means you have to write under adjusted profit and loss account 9,000. Okay. Then general reserve 3 lakhs 10,000. So 10,000 transferred to general reserve. So you have to adjust in the adjusted profit and loss account to provision for general reserve 10,000. Then depreciation. See here depreciation. Fixed assets costing 10,000 was sold for rupees 12,000. Okay. See here asset. Fixed asset account 4 lakhs, 3 lakhs 20,000. That account we have to prepare, ledger account. Then only we can find out whether what is the depreciations. Fixed assets account, opening balance 4 lakhs, closing balance 3 lakhs 20,000. Current year, 10,000 worth of goods was sale of 12,000. See here, it is given in your adjustment. See, during the year, part of the fixed assets costing 10,000 cost of machinery, you are selling out 12,000. Okay. So 12,000 sale means by cash or bank account, sale of fixed assets 12,000. Okay. Then 10,000 worth of machinery, 12,000 you are selling. Is it profit or loss? Is it profit or loss on sale of machinery?
Profit, ma'am.
Profit. So that profit means what you have to write? Debit side to profit and loss account 2,000. You have to eliminate that profit. Okay. That profit profit on sale of fixed asset you have to write off in the adjusted profit and loss account. In the adjusted profit and loss account credit side by profit on sale of fixed assets 2,000. Okay. That is, this is non-trading income that you have to write off. So here, see here, remaining this is balance 70,000 is depreciation provided during this year. So this depreciation you have to write in the adjusted profit and loss account 70,000. Then investment is also one thing is given. Investment costing 8,000 were sold for rupees 8,500. See here investment 2,500, 50,000 is given. Here 60,000 is given. We have to prepare investment account, ledger account. Opening balance 50,000, closing balance 60,000. 8,500 you are selling. 8,000 worth of investment you are selling 8,500. So 500 is profit or loss? 500 is profit or loss?
Profit.
Profit. So profit means debit side you have to write profit and loss on sale of investment 500. That you have to write off in the adjusted profit and loss account credit side. That is by profit on sale of investment 500. You understand? Two adjustments you have to write it in two places. So here profit and loss, profit is 500. So now you close this investment account debit side comes 68,500. Here only Yes, 68,500. This is balancing figure. 50,000 plus 500 da. So remaining 18,000 balancing figure is treated as an purchases of investment during this year. This is balancing figure. Okay. So this purchases made on investment during this year. Where we have to write purchases of investment? Where we have to write? User side of cash flow statement. See here, cash flow statement, user side, purchases of investment, 18,000. Right? Sale of fixed assets, you have to write under sources side. Sale of fixed assets, 12,000. Sale of investment, 8,500. Purchase of investment in the user side of cash flow statement. Then taxation made, you have to write in the adjusted profit and loss account. Paid, you have to write cash flow statement user side. Okay. See here, taxation, opening balance 75,000, closing balance 10,000. Made during this year is given 9,000. So let us prepare provision for taxation account. Opening balance 75,000, closing balance 10,000. So tax made during this year is given by adjusted profit and loss account 9,000. So credit side total is 84,000. This side only 10,000. That means 74,000 balancing figure is tax paid during this year. Tax paid is 74,000. You have to write in the user side of cash flow statement. You understand? Now you come to the adjusted profit and loss account. We have written all the thing. Your credit side, if here debit side exceeds your credit side, that is adjusted funds from operation. This 98,500 is funds from operation. That you have to take it and adjust your current assets and current liability for finding the cash from operation, right? So see here, funds from operation, add. What you have to add? What you have to deduct? What you have to add for finding cash from operation? Any one of you, can you tell me?
Decrease in current assets, increase in current liabilities.
Very good. Decrease in current asset, increase in current liability, we have to add. What we have to deduct? What we have to deduct? Increase in current assets.
Increase in current assets and decrease in current
Current
liabilities.
liability we have to deduct. That you have to keep it in your mind. Suppose if you have confusion, you see the logical thinking. Cash inflow or outflow. Current liability increase means cash inflow. Current asset decrease means cash inflow. Like that, if you see the logic, no need to get confusion. Okay. Inflow of cash we have to add. Outflow of cash we have to deduct. That's all. Okay. See here, your decrease in stock only 30,000. Add item. Deduct item is more. 34,000, 2,45,000. So minus value. So 2,75,000 minus 30,000. So 2,49,000. That is minus value. Plus value, if you deduct it, 1,50,500 is minus value. Minus value means what? Cash lost in operation. Right? Cash lost in operation. Cash lost in operation, you have to write in the user side of cash flow statement. So what is the one more thing? For cash flow statement, no need to find out increase or decrease, nothing. Your cash flow statement will get tally. All the items, whatever you are writing, the sources side and user side should get tally. Otherwise, you have done some mistakes. But fund flow statement is not like that. That the balancing figure will come, that is called increase or decrease in working capital. Okay. Here there is no working capital we are calculating. We are calculating only what is the closing cash balance. That's all. Closing cash balance. That already given in the balance sheet. Okay. You understand any other doubt? Do you have any other doubt?
Ma'am.
Is anybody?
Ma'am, for working out the problems, any reference book you'll be giving?
Reference book, this time we used to give only financial statements. Second semester book only we used to give.
Okay, ma'am.
Alternatively, we used to issue either accounting for manager book or financial management. So this time, financial management only they are going to give. So
Okay, ma'am.
you can refer any textbooks. It is plenty of books are available in the market. And then even in Google, if you search, plenty of problems will come. You can practice it.
Okay, ma'am. Thank you, ma'am.
The adjustments will be differ from one problem to another problem will be differ. Depends upon the adjustment, you have to prepare the solution.
Okay.
Right? If you have any doubts, you can ask me regarding fund flow statement and cash flow statement.
From question paper, how many problems and how many theories, like any
As per our
proportion?
syllabus itself, we have given 70% problem, 30% 70 or 80. You see your syllabus.
Okay, ma'am.
There itself we have given
啊
70 or 80% problem, 20 or
Okay.
30% theory. So in that case, 20 marks definitely will be given problem. Sometimes most of the time they may ask you to prepare final accounts or fund flow, or sometimes fund flow cash flow also they may ask. Sometimes ratio analysis, sometimes marginal costing decision making problem they may ask. Like that.
Okay. Thank you, ma'am.
Any other doubt? Shall I start next unit, or once again shall I explain all fund flow cash flow? 2 more unit is there. We have only 2 more hours. Today it is 6 hours over, na?
Ma'am, just a brief about again cash flow and fund flow.
I have briefed already, no? The fund set. Okay, once again I brief you.
Yeah, quickly.
Fund flow statement is the statement which we are preparing to know increase or decrease in working capital. So what is the changes in working capital in between two balance sheet period? Okay, in fund flow statement we used to divide into two, that is current items and non-current items. Two statements are preparing, that is schedule of changes in working capital one thing, and fund flow statement. Right? So schedule of changes in working capital, we used to take only current assets and current liability. Current assets minus current liability, we have to find out what is the increase or decrease in working capital. So in that case, for assumption, you have to keep it in your mind. That is current asset increase, the effect of working capital will also increase. Current assets decrease, the working capital effect will also be decreased. Current liability is vice versa. That is a decrease in current liability, working capital will increase. Increase in current liability, working capital will be decreased. So these 4 assumptions you have to keep it in your mind while preparing schedule of changes in working capital. Okay. In fund flow statement, we have to prepare adjusted profit and loss account. So adjusted profit and loss account, we need to find out funds from operation or funds generated from your operation. How to find out? Opening cash balance, opening profit and loss account balance and closing cash profit and loss account balance. You have to adjust non-trading and non-cash expenditure in the debit side. So what is non-trading and non-cash expenditure? Non-cash expenditure, that means depreciation, transferring to any general reserve, write-off to goodwill, or transferring to any other resource, payment of proposed dividend, interim dividend, taxation made during this year. So all these loss on sale of machinery. So all these non-trading and non-cash expenditure you have to adjust in the debit side, or if you are preparing statement form, net profit, if it is given, net profit, add all these non-cash and non-trading items, you have to add back. Deduct the non-trading income. Now, what is non-trading income? Profit on sale of asset, rent received, commission received, dividend received, interest received. These are all non-operating income. Okay, non-operating income is to be deducted, adjusted. So that is why adjusted profit and loss account, credit side, these things we have to write. So find out what is the funds from operation or funds lost in operation. Funds from operation we have to write in the sources side of fund flow statement, and funds lost in operation, minus value. If we get in minus value, that we have to write under user side of fund flow statement. Then we have to prepare some adjustment ledger accounts. Ledger accounts to find out depreciation. What is the so for find out depreciation, we have to prepare machinery account, fixed assets account, furniture account, like that. Sometimes we have to prepare taxation. Provision for taxation account we need to prepare to know what is the tax paid or tax made, that we have to write. Then investment account. So whatever ledger accounts you are required to find out any purchases made during this year, any asset or sale of asset. If you prepare ledger account, then only you can find out. If it is one item, easily you can find out. If you the 2-3 items, if it is there, it is easy to prepare out while preparing the ledger accounts. Okay. So after preparing this thing, you have to prepare fund flow statement. In fund flow statement, in sources side, you have to start with funds from operation. Funds from operation, what you have find out already from your adjusted profit and loss account, that you have to write. Then you have to write see the balance sheet and liability side and asset side. You have to take only non-current item. So what are the non-current items? Issue of share capital, and then issue of debentures. Increase means issue of share capital, issue of debentures. Long-term loan, if it is increased, that means raising of long-term loan, that you have to write in the sources side. Suppose if it is reduced, loan is reduced, means repayment of loan. Repayment of loan you have to write in the user side of fund flow, statement. Okay. Then assets. Sale of asset, it is a fund inflow. You have to write in the sources. Purchase of fixed assets, that you have to write in the user side of your assets, fund flow statement. Then payment of taxation. Payment of taxation and payment of dividend. So you have to write in the user side of balance sheet. Then difference, if your sources side exceeds your user side, that balancing figure comes in the user side, that is called increase in working capital. Suppose your user side is greater than your sources side, that is called decrease in working capital. Okay. When you are preparing increase or decrease in working capital in fund flow statement, the same answer you can get when you are preparing schedule of changes in working capital. So working capital, that is current asset minus current liability. Okay, that thing. Now in cash flow statement, you have to prepare only one statement. You have to start with opening cash balance and bank balance. End with opening and closing. End with closing cash in hand and the cash at bank in the cash flow statement. Cash flow statement, sources side opening balance you have to write. User side closing cash in hand and bank balance you have to write. The other thing, cash from operation we have to write in the cash flow statement. User side you have to write cash lost in operation. Then remaining items as usual, like fund flow statement, that is sale of asset, issue of share capital, and then raising of loan, all these things sources side. User side we have to write purchases of asset, repayment of loan, redemption of debenture, then payment of taxation, interim dividend, interim taxation paid. All these things comes under user side. That's all. Then you have for this cash from operation, you have to find out as usual. Adjusted profit and loss account, you have to find out funds from operation. Funds from operation plus increase in current liability, and decrease in current asset we have to add. Increase in current asset and decrease in current liability we have to deduct from funds from operation, that is called cash from operation. Right? I have summarized all these things. Can we go for next
Thank you,
one?
ma'am. Yes, ma'am.
Time up only 10 minutes, so 5 minutes more. Okay, tomorrow 1 hour it is insufficient for me. That's why I thought of to start. Okay, let me start marginal costing today. Tomorrow only 2 more hours are left over, right? Marginal costing I have to teach you, and then cost sheet, variance analysis. So many things are there. Better I start now. Can you see? Can you see this PPT?
Yes, ma'am.
Marginal costing and cost volume profit analysis.
Yes, ma'am.
This is next 4th unit. Marginal costing. Marginal cost means what? What is marginal cost? Cost means what? What is costing?
Value.
Value. What is cost? What is the expenditure you are incurred for producing the product? That is called cost.
Yeah, madam. You're right.
Right? That is ascertainment. We used to say it is a ascertainment of cost. Right? How much we are incurred. Add some profit, that is called price. Cost plus profit is price, selling price. Isn't it?
Yes.
What is marginal cost? Marginal means what? Margin means what?
Standard cost minus sales price minus standard cost. That is marginal cost.
No. Marginal cost is what we used to say. It is a additional cost of producing additional unit. Generally, it is used to say additional cost of producing additional unit. Say for an example, 100 units you are producing. Its cost is 1000 rupees, right? So now you are increasing your production 110. So what is the cost should be? 100 units, 100 units cost is 1000. Okay, how much per unit is cost is 10 rupees. So if you are producing more 110 unit, it should be 1,100 rupees you have to incur, isn't it?
Yes, madam.
Instead of 1,100, you are going to incur only 1,060 rupees.
Okay, 40 rupees marginal.
That 40 rupees is what? Why it is not incurring whole? Why? Because the expenditure what we are incurring classified into two categories. That is fixed expenses and variable expenses. What is fixed expenses? What is variable expenses? What is fixed expenses? What is variable expenses?
The labor cost and all fixed cost.
Cost which is
Direct
incurred for the production of producing goods vary with the volume of output. If you are if you are putting raw material for 1 unit 10 rupees, for 100 units 1000 rupees, right? So the cost which is incurred for vary with the volume of output, generally raw material, wages and direct expenses. These are variable expenses, vary with the volume of output. Some expenditure, nature of expenditure is fixed expenses. What is fixed expenses? It is whether you are producing 100 unit or 1000 unit or 10 unit, you have to pay the same amount. You have to incur. Say for an example, one classroom, I have to pay rent 1000 rupees per month. I can accommodate 100 students. I can accommodate even one student also. I have to pay 1000 rupees. The maximum accommodation in that classroom is 100. I can accommodate 50, 60, 70, whatever it is, I have to pay 1,000 rupees. That is called fixed expenditure. Do you understand? So while doing production, some expenditures, factory rent, salary for manager, some expenditures are fixed expenditure. That kind of expenditure, if you will not incur, if you are increasing your production, that will not incur, right? That is why the marginal cost means the additional cost of producing additional unit. That is called marginal cost. Do you understand? Do you understand clearly? Marginal cost, we used to say it is a variable cost. That is, marginal costing means it is a ascertainment of marginal cost, and the effect of profit changes in volume or a type of output by differentiating between fixed cost and variable cost. When you are differentiating between fixed cost and variable cost, your cost will be vary with the volume of output. That effect on profit you have to ascertain. That is called marginal costing. See, the amount of at any given volume of output by which aggregate variable cost are changed if the volume of output is increased by 1 unit. If you are increasing 1 unit, aggregate variable cost are changed. Only variable cost change. Fixed cost will not change. Okay. So it is measured in terms of that is total variable cost attributable to 1 unit. Marginal cost is called that is a sum of prime cost. Prime cost means direct material, direct labor, direct overheads. That is called prime cost, variable cost. So variable cost, we have to deduct it. Sales minus variable cost is called contribution, right? So sales minus variable cost is contribution. So contribution is the difference between sales and variable cost. Okay. See, marginal cost statement. This is just revenue, product cost, both direct material, labor, direct expenditure, variable expenditure if you are deducting, that is contribution. All the variable cost if you are deducting the contribution minus fixed cost, that is profit or loss. This is this marginal costing statement, we used to call it as cost volume profit analysis, CVP analysis, cost volume profit analysis. Based on this marginal costing is a technique which is using for managerial decision making, various decision making, that is whether to produce, make or buy decision, whether to accept export decision or not, mixing, if you are producing 2-3 product, if there is any key factor, so which product will give you maximized profit, so you have to produce a more number of product, which unit you have, which product you have to produce. So these kind of decision making we can take by using this marginal costing technique. Okay. See here, this is the marginal costing statement we used to prepare. Sales minus variable cost is equal to contribution. Contribution minus fixed cost is equal to profit. PV ratio we used to calculate. PV ratio means contribution by sales into 100. PV ratio means contribution formula. You have to by heart. Contribution by sales into 100. Is there another method? So suppose two periods, previous year and current year sales and profit if it is given, you have to find out PV ratio by using this formula. Change in contribution or profit divided by change in sales. Change in profit by change in sales into 100. That is the formula. Then we have to find out break-even analysis. What is break-even analysis? Break-even means what? What is break-even point? Break-even point means?
No profit, no.
No profit, no loss. The point at which there is no profit, no loss. That means what? Your aggregate total cost of producing the product is equivalent to your selling expenditure, isn't it? Selling price. In that, it will cut at that point. One point it will cut. There is no profit, no loss. That is called break-even point. this by using this break even analysis, we have to calculate what is the profit, what is the number of units to be sale of, whether to we have to take so many decision making by using this break even technique. How to calculate, how to find out the break even point? Fixed cost by contribution or PV ratio. Generally, we used to take fixed cost by PV ratio. Suppose PV ratio, if you don't have contribution, if you have, you can contribution per unit. If you put, you can get a break even point in units, number of units you can find out. If you want to say break even point in rupees, fixed cost by PV ratio. If we do some problems, you can understand. Okay, some some concept I have explained now. Tomorrow, first 2 hours my class. I have marginal costing, cost sheet, and then labor variance analysis. These three things I will teach you tomorrow too, within 2 hours. That is sufficient. After that, if we have some time, let us discuss. You practice some problems. Whatever doubts you have, you note it down. And after finishing the class, we will discuss. Okay. Okay. Thank you. The
Okay.
other faculty will be on waiting. I will quit. Okay. Bye. properly. In that case, what happens? The span of control has to be small. So this depends on the fewer factors like the authority they have, responsibility, accountability, and the measurability of the job output on the end of the day. Based on these factors, the span of control is designed. But if the span of control, as I told you, is not properly balanced, it will result in poor organizing. The next one is chain of command. Who commands who? That is very important. See, for example, one boss can have many subordinates. You can control, you can direct many people, but one employee cannot have two bosses. Clear? One employee should not be getting orders from more than one person. So this will create confusion in the chain of command, and this chain of command, if it is not clearly drawn, it will result in chaos in the organization, right? So see, imagine like this: if one person has to listen to two people, whom he will give importance, right? Which work to be done first? All these problem will come at one point of time. What will happen? These two bosses will be fighting over the employee, that who has to have more power over that person. So all these problems will arise. That is why we say chain of command has to be properly drawn. Then what is that? Designed to endure coordination among departments. When you are drawing the lines, the organizing structure, if it is properly done, what happens? The departments also understand that who is on the hierarchy and how it is controlled by others. So we come to the next one. So we will see the different kind of structures, organization structures one by one. The first one is vertical structure, right? These are the traditional structures. We call them as traditional structures, vertical and horizontal. A vertical structure is what? Which is like the length of, vertically it is more. You can have a lot of designations one below the other. That is what we call as vertical structure, right? This is a very traditional one. In this, you can see the span of control is always less. You can have many superiors, less subordinates for each of them. That is the vertical structure. So it starts with the highest person in the organization. And see, in this example, I have given you all the kinds of branches you can have. You can see that under CEO, an audit officer is there. So you can see that he comes under CEO, right? But no one is under him. Are you able to see? So auditor officer can be controlled, monitored only by CEO. An audit officer is independent as of here. He doesn't have any subordinates. And also from CEO, there are 3 departments. Can you see the 3 departments are given downwards boxes, but auditor officer given sidewards. That's the difference. He is not a department. But these 3 are departments: purchase, sales, and finance. So 3 departments are headed by purchase manager, sales manager, and finance manager. So under purchase manager, you can see 2 executives working. Under sales manager, there is assistant sales manager, and under him 1 executive is working. Under sales manager, salesmen are working. This can be adjusted, like assistant sales manager can be the next to sales manager, and all the executive and salesmen can come under assistant sales manager also. It depends on how the accountability of these people are here. And you can see the 3rd department, finance manager. As of now here, there is no subordinates to him. If there are people, you can go on extending this diagram, right? So this is what we call as organogram. And the next one, this is horizontal or flat structure. This is also a traditional structure. So this is a very common structure we can see everywhere. Like, see, this has a flat structure. Here, the number of subordinates are more. The control and monitoring will be more. Like under 1 manager, operating manager, specialist, and a lot of staff, right? So the cascading down effect is a little bit less here. For like geographically spread organizations, or for like a branches, a lot of branches you have, less number of staff in one place. These kind of organizations can go for this horizontal or flat structure. We come to the next one. There are fewer more organizational structures. I'm not going to take time much on that. We will be seeing that in the next semester papers, where we have more area to cover these structures. And if time permits us, I will tell you more about the organizational structures. We have a lot of different kinds of structures in that, right? As we are running out of time, I'm just moving on to the topic so that you will have a taste of water, all the topics we have. This is centralization and decentralization. What are they? See, a centralization is nothing where you can gather all the authority at one place, where decision making lies in one top. That is called centralization of authority. Decentralization is if you are going to distribute it downwards, you are giving all the people who are all like middle level managers, you are giving that authority. That is called decentralization. See, decentralization is not only about authority, it comes with responsibility, decision making, monitoring, directing. All these are decentralized, like management getting distributed in chunks to all the people below. That is decentralization. Why decentralization is advocated in most of the hybrid or new age organizations, because decentralization has a lot of advantages, like it cuts down the cost, it cuts down the time of communication moving here and there, and also it creates a forum, it creates a platform or ground for to improve the people. They gain knowledge, they gain a lot of experience when you are giving them the authority and responsibility in chance. So this is why decentralization is widely accepted, and we can see now the new age organizations, all the organizations are practicing this decentralization rather than centralization of power. Okay, so but to implement centralization or decentralization, it needs a lot of experience and care, and how much to be decentralized and how much should be kept in the center. And it is better if you create a proper policy. Otherwise, again, it will create a lot of chaos if you are not doing that properly. So what is departmentalization? In organization, the other important topic is departmentalization. What is this? How to departmentalize, on what basis? Okay, usually we can see that we all know how it is working based on the functions, right? Whatever we have seen, these two examples are based on functional approach. Like you are making production department, sales department, finance department. These are all departments based on functions, what work they do. Based on that, we create departments. But there can be departments on various factors, like divisional approach, it is called. How we divide product based for each product. Say, for example, Hindustan Liver Limited, a lot of products. They can have departments based on, see, home care products, beauty products, cosmetics, like that. So, product based departments we can have, are geographically divided. Say, you have a lot of branches. So, you can make a department for all the branches in one place, right? So geographically divided. Then customer based, what kind of customers we have. For that kind of customers, each one department. For like, see, for age groups, for younger age group, for babies one department, infants one department, teenage one department, based on customers. Then team based, what is the team you are using? You can have the departments based on the teams. Okay, so this is also another one kind of organization. So there is another one structure called matrix. In organizational structure, we have one structure called matrix structure. This is called a hybrid structure. This is very innovative. This is usually totally paradoxical to the traditional structure, because if you remember, I told you chain of command. You can have only one person as boss. But in matrix structures, what happens? These kind of new age structures gives you efficient way of downsizing the workflows, as well as efficiently controlling and monitoring not only the human resource, all the other resources we are talking about. I have given one example of matrix structure. See, for example, you have one person at the top, CEO or president, and you can have vice presidents in 3 departments: marketing, sales, and research. And we have 3 project based departments in Mumbai, Delhi, and Chennai, right? Say, for example, this is a bridge building company, a construction company. So they have 3 flyovers built in Mumbai, Delhi, and Chennai. So 3 project heads are given in 3 different places of the country. So for this, you cannot have a separate marketing or purchase department, because you are doing the same industry. If you are going to buy cement or steel, you can buy it in a centralized manner and distribute to the 3 projects. So what happens? You can have functional based departments, you can have geographically based departments, and they both can interlink. Are you able to understand? This is what we call matrix structure. 2 kind of structures coming together, integrated together. So what is the advantage here? So the marketing, sales and purchase can be done for all the 3 projects. Are you able to understand? Then why we need projects? Because the Mumbai project is totally different from Delhi project. You cannot have one project manager for all the 3. Are you able to understand? So you should have a geographically divided departments. So these kind of structures we call as matrix structures. And how we can further divide the organization into as structural wise or departmental wise, global and virtual networks. This is very new. This came very successfully after Corona pandemic we had, because we had to sit at home and work. So prior to Corona, this was happening in few industries like software industries, or where you can have a lot of automation involved with. But after Corona, what happened? This global and virtual networks have become a common phenomena of working structure, right? So what is the advantage in global and virtual network? It is very flexible and very competitive because it is cost effective. You are not going to spend much on rent or electricity or internet cost. All those things are totally erased up. And what is the disadvantage? If you are sitting at home, you are giving flexibility and you are not at one place where your employees are, lack of control. You cannot control them. The monitoring is very loose, right? You cannot measure. So, and the lack of coordination, you have to depend on the email or a chat box or something which you are using. So what happens? The lack of coordination is very heavy. It is not like you are sitting next to next and face to face, right? And the time difference, obviously we all have suffered this. So when the global and virtual networks have come to the peak during 2021 and 22, what happens? The time difference made a lot of nuisance in the working conditions. So this is another one kind of making groups or divisions or departments, whatever you say. They are called task forces and teams. How these are different? Both are little bit same. Task force is also a team, but task force is very small. They are temporarily designed for one particular problem. When once the problem is solved, the task force is dissolved, right? And it can involve many department people into one thing. But task force, why still we have it, is very effective because it comes in short term, that you have to finish only one goal, like that goal you have to achieve. So what happens? The task force is fully with Josh to complete that. Once it is done, like you can think it is like a what do you say, atom bomber, but just like that it goes and finishes off task force. But teams are medium term assignments. It's also like not permanent. Teams are, we will read more about that in later stages. Just now learn that team is a very successful way of departmentalization for short term, right? So you can have cross functional. You can call up various people from various departments to make one team for particular assignment, right? Once the assignment is over, the team has to be dismantled, and that's how it works, right? So actually by the plan, we had a small case study here to see, but as we are running out of time, I'm keeping this case study for later stages, right? And we are moving on to the next topic, right? What's the next one? So we have seen organizing, right? How the organizations work. With that, we come to the newest trends in the business culture. What are the emerging trends? What we are going to face in future and what is in present? What are we going to step out? Once you complete MBA, what you are going to look at as an organization? The first one is the external environment. See, now you can see that we have come through a long journey, 2-3 years of pandemic. You can see that how much we have learned new, how much we have adapted, I should say. Are you able to understand my point? Survival actually is most possible for those who adapts. We have come through a lot. So this is the emerging trend in the business culture. So change is going to be constant. Continuously the things are changing. Starting from technology to politics and policies, everything is changing. So the organization, when it is flexible to adapt, which is ready to change, survives the better. Right? This is a totally new concept because previously the stability is that one matters for any organization. We appreciated the stability of organizations, which is strong, which is not changing. But That is changed now, right? Survival is most possible for those who adapts. And the new trends are affected by every day. So you can see new entrants, new ideas are coming into business. And the customer loyalty, it is eroding, Previously, you can say, I know people who will use the same brand of soap for years together. Like I know one brand, Lifebuoy. That soap was used by families like loyalty to the core. They will not touch any other soap, right? If you take that now, you can see that we don't use the same soap maybe for 2-3 months. We are going on changing for so many varieties because suppliers power and also the product power. You are getting a lot of substitutes, a lot of changes over the brand. So what happens? The customer loyalty is going down and down. It's very hard to hold the customer. And it is ever changing market. As I told you, the globalized economy, we are in the globalization era. So what happens? Whatever a country newly finds, it can reach other countries with no matter of time. So what happens? Previously, it was indigenous. What you have to do in your country, it will take time, right? But now with the globalized economy and the internet and communication is flying. So what happens? Whatever we do, it is global. So what happens? The markets are changing every day. Which country's product we are using, that too we don't know. What happens? Because they are marketed by Indian companies, so we cannot rightly find out where it is from, who has made, what are the resources they used. So globalized economy is the ruling trend in the today's culture. Then when it comes to the people, what are all the changes that has come in these fewer decades? We call it as flexi, okay, flexibility, flexi work. What are the things that has been flexi time, okay? Previously there was a set time. Like if you ask your father or grandfather what is the time they work, 9:30 to 5:30, or shifts in the factory. Now it is flexi work. Whenever you find time, you can work. You have to finish the target, right? So flexi time has given that freedom to the people who are working. Flexi place, you need not go to the office, sit in your place and work. You can work wherever you want to work from. Flexi place. Flexi wages. Say, I don't want to work all the 20 days or 25 days per month and need the salary. I want to work for 15 days. You give me half salary. Flexi wages is possible. So I have to appoint two people, 15-15, right? Or I can appoint 15-10-5, 15-7-7. It is also, it becomes a freedom for the employer as well as employee, that it is not a commitment for the entire time. You have to allocate the work and output measurability according to that. So what happens? It becomes easier. Then hybrid workplace, you can have all these things together in one workplace. Some people can come and work. Some people can stay at their home and work. Some people can come by 9:30 to 5. Some people can come by 11 o'clock at the night and go by the morning. Hybrid workplaces. Anything is possible. Are you able to understand? This is the another important emerging trend. Okay. Then the next one. New awareness has come in this way. Emotional health and intelligence. Why I am saying is that a trend, all these years, as I told you, human were also seen as a resource, as one of the men. They were not treated much with, respect, or much with the awareness that they are also having thinking capability. They are also having emotions. They also can be creative. These things were not at all noticed. In one workplace, some 10 years ago, if you are coming up with one good idea, right? You are saying that, no, if you change this mission a little bit like this, it will be good. If it comes from a mission man, what probably would be the... are you able to see the slideshow?
Yes, ma'am.
Ma'am, we are seeing case study.
Just hold on. I wonder if it is changing. Just hold on. Are you able to see now?
No, ma'am.
No, ma'am.
Now?
Hello.
Yes, ma'am.
Now, okay.
Third
Yes, ma'am.
section,
Yes, ma'am.
we have not seen the previous slides, I think, right? Why nobody has told me that?
No, this emotional health we couldn't see. Other than that, we saw it.
Okay.
We were able to see.
Okay, very good, right. Emotional health and intelligence are able to see now?
Yes, ma'am.
Right, okay. As I told you, see, for example, in your father's generation, he goes and says, a missionman goes and says, if you can change a little bit this side or this angle, it would be far better for the productivity. What would be the reply, you know? You go and do your work. Right? Even now we get that sometimes. That's because we were not seen as a human who can think or who can take decision or who can be sad or who can be emotional. Are you able to understand? So now this is a big awareness that is coming into place for the last, what we can say, last maybe 7, 8 years, 6 years maybe. SP Rajasthani, can you mute your mic please? I am muted, right. Okay, thank you. Right. So this is one big change, you know. I'm very happy about that as a HR faculty. I'm very happy that this particular trend has taken into all over, almost all the organizations, all the industry, all over the world, right? What is this? This is about the emotional health. See, because I think last class we have seen when a person enters into the organization, he is the same who started from the home, right? He is the same person. So he's been carrying thoughts or the problems which he has at home to the organization. He cannot just like a robot come to the organization, start working whatever he is feeling inside, right? So everyday productivity is depending upon the person who is working on that day. I think we have seen in Hawthorne studies also how this has helped people understand. But this is now getting its, prime attention because it is clearly related to that IQ with EQ. What we call as EQ is emotional quotient, like intelligence quotient. And emotional quotient also has link with intelligence quotient. And emotional health, what we say, is very essential for the organization. Why I'm saying, it is interrelated. It's like a network. You can say that just one person is not okay. What is going to happen to the organization? No, not like that. Say, for example, that one person is a star performer in one important team. He has some emotional problem that he is not able to come to that particular, level he used to be. This will affect the entire team inside the organization. So what will happen? That day's output may be going wrong. If that day planning is happening, the entire year will go wrong. Are you able to understand? So everyone is important. Everyone's emotional well-being is important in organization, and every day it matters. Are you able to understand? So this is a very good thing that has happened to the organizations as an emerging trend. So how this is given? Psychological safety is a term that is being used for the employees, because you can see that the workplace is a very important factor that affects the psychological safety of a lot of people, because all of us work, we spend more of the time in the workplace. If the workplace is disturbing, or we are getting harassed or threatened, or physically it is affecting. Every day the smell that is emitted by the organization is creating me headache. That will cause him psychological stress also, right? So a workplace has to give the assurance, safety, not only for the physical well-being but also for the psychological well-being of the employees. This may be in totem or it may be individual, right? So if you come cascade down to the next level, what is it? Workplace harmony. What is workplace harmony? Like, you work harmoniously. If everyone is together at one job, they are all aligned together for one work, that is workplace harmony. You will not disturb.
No, the slide is not moving.
No, it is same only, right? The third one is employee engagement. See, engagement is like when you are getting committed. If you are not monitoring this employee engagement to the job, it is going to be a disaster for both the organization and that particular employee. That's what we call as engagement. How you can engage? There are few factors that is to be noted when you have to check whether employee is engaged. Whether he is interested in the job, whether he is getting any satisfaction out of the job, whether he is able to be creative and performing in the job, right? So employee has to be engaged. All these things are responsibility of the organization. Remember again and again, that's why we are seeing it in organization, not the responsibility of the employee. If the employee is not getting engaged in the job, it is not his fault, it is your fault, right? Like in the same class, if I'm not able to engage you, it is not your fault, it is my fault. Do you get my point? So I should make the PPT, or I should bring in stories, or I should get more attractive things so that I can engage you for this 1 hour. It is a responsibility of the person who is doing that and not the person who is given. Are you able to understand? Right, this is an important trend you have to understand. The next one. So continuation of these things, there are fewer topics which you need to know about the emerging trends. Just I'll go through that fast. And workplace equality, right? Workplace has a lot of things, right? Equality. What about equality? Can anyone say what are all the inequalities that you can face in the present scenario in your workplace? Name some of the inequalities. Just I want to know whether you are engaged. Yes, Abhishek.
Ma'am, inequality in salary payment.
Krishna Kanta, can you mute so Abhishek can say his answers first? Yes, Abhishek.
Yeah, the harassment of juniors by the senior employees.
Workplace equality, no. Inequality is not senior and junior. It is a organogram, hierarchy, right? So you cannot say that. Anything else?
Pay parity.
Very good. Right, pay. There are difference in the pay. With whom can you...
Gender parity.
Very good. Gender inequality. So that leads to the pay inequality among the genders too. Very good. Then anything else? SP Rajasthani. Any other inequality can you think about?
Yeah, lack of opportunities.
Venkatesh Shah, yes?
Lack of opportunities.
But how can you say lack of opportunities are inequality? No. Among whom you are talking about? I need a group. Inequality.
I'm not getting same opportunity where other one is getting the same role.
But that is not inequality, you know. What you are not getting the right point actually. See, I'll answer you. See, workplace inequality is, it is from the age-old trend. Still, it is what do you say? It is surviving, I should say. Even though we are able to abolish, a lot of inequalities are in place, intact today. Even, yes, Nikhil Thorat, LGBTQ. Yes, that I was about to say that. Very good, right? So, from age 1, right, we are trying to abolish for a lot of things. And remember, this is not only in India. Once again, I'm saying this is all over the world in the well-developed countries. First thing is skin color, race. You know, still this is white and black. Still it is there. Inequality. And this inequality, all these inequalities will result in pay inequality, like white, black, race, ethnicity, religion, gender, as caste. When it comes to that, caste, inside intercaste, a lot of smaller group subdivisions, right? You name it. What is not there? This is not only in the society. See, organization is just a mirror. It's a reflection of the society, you know, because whoever we are calling as the people, yeah, language inequality, very good. In the society are the same people who are working in the organization. Do you get my point? So when you are having these caste, creed, all these in your head as a social person in a society, and you walk into your organization as a manager, do you think he is going to leave all these things and enter into as a new person into the organization? No, he is carrying all these things to the organization as a manager. So what happens when he sits for example, recruitment? Who he will favor, you think? The bias happens starting from the recruitment, right? So as I told you, all these inequalities are happening. So now why we see it is in trend? So this becomes topic that can be openly discussed about, at least, right? We are moving forward that it has to be equal to everyone, right? Starting from A to Z, whatever we have discussed now. We cannot say more, but we are trying to thrive that workplace equality should be maintained. At least it has become a discussion topic. That itself, for me, I think it is a very good trend setter. So when we move slowly in this path, maybe one day we will achieve workplace equality, right? The next topic is mindfulness. Again, this is like, that is what I told you, employee engagement, right? And also you are improving the creativity. Mindfulness is making the employee get engaged in the work. This doesn't happen. Why we have to talk about this is, you can see that in many of the places, as you are all our employees, or most of you are working, you answer me, do you work mindfulness in every day in your workplace? How many of you can say that, yes, I am mindful in my workplace?
No.
Yes, ma'am.
Yes?
Not
Yes,
every.
yes.
Yeah.
But not everywhere and every time.
Yes, sometimes. So can you pinpoint that sometimes when you are mindful?
Ma'am, if I love my job, then I can able to mindful, ma'am.
Exactly. Very good. You know, when I asked this question, I was
And I'm
thinking
doing
myself.
job, and I'm doing the job what I like.
Yeah, exactly. Very good. Right? See, I thought of this while thinking, when I am mindful, when I have like this conversing students, when I get answers, when I have people, students thinking and answering, I became mindful, right? Because I have to listen, what I have to think about what I'm saying. So that is it. When you are engaged in your job, when you love the job, you become mindfulness. You can see that as a example. You can take the art side, like people mostly who are acting or singing or music composers, those who are in the that is in the work of art, the time they are involved, the mindfulness is more in that area. So we are trying to bring that into the organizations. Then QWL, we will see later in second or third semesters. We have a lot of bigger topics in that. Just I'll give you introduction. Quality of work life, right? As I told you, we spend a lot of time in the workplace, right? Our prime, like, see, we are in our life, we are prime, say from 20 to 50, 30 years of prime life we had, when our knowledge is at the peak, when our vigor, physique is at the peak. So we can say the 30 years. But where we are at the 30 years, still you split out. In that 30 years, what is the prime time you have from morning 9 to, say, evening 9? Other time is sleeping time, okay? Still you can say prime means you by 6 o'clock we get tired. So we can say 9 to 6. So where you spend most of your prime life, prime time, at the organizations, work life, right? So paradoxically, we say why we have to work for the life. Are you able to understand? And the life we are spending in the organization. That's a paradox, right? So what we do, okay, there is no other way. You cannot run away from the workplace. So you have to work. At least let us make that work life a qualitative one, so that memorable. So you be happy at the workplace. If you are not happy and joyful at the workplace, then there is no use of you going to the work at all, because there is no other life left out for you to enjoy with the earning you have from the work. Are you able to understand? So that's why what we do, make your work life qualitative. At least spend the time in the organization in a qualitative manner. So there are a lot of techniques how to do that, and it is either side, individual as well as the organization, how you have to do. All these things will be, we will study in the later side, right? The next one is work-life balance. It is almost whatever we are talking, all are same. So, extension of that one, when you want to make a quality of the work life, make the work life balance. Okay, make the work, your life, personal life, a balanced one. Spend time. After all, you are earning for your personal life. When you don't have the personal life, there is no meaning you have to earn at all. There is no work life. Are you able to understand? So remember that. So keep some time for your life, so that you can spend the money where you have earned to this side. That is what do you say? Give and take policy. Give some from here, take from there. Okay. So work-life balance. We will see that again. All these things we will be studying in the later subjects, right? And workplace transparency, workplace security, all these things are newer trends. A lot of workplace topics are there, right? As we don't have time, I'm just giving you one or two. They're called workplace topics: workplace harassment, workplace psychology, workplace transparency. All these things are newer trends. They are coming into the running now. Okay. Then still there are more trends. Just we will see the topics like digitalized markets. I know I don't have to tell about this. More of you know that more than me actually. Digitalized markets, that how the social media is helping. What other automated centers, or how the digital media is helping the market. Then social media influencing, as I told you, you can see that influencers are like cinema stars now. Social media, YouTube influencers are like absorbed everywhere. They are like the representative of the normal public. Then youth participation. This also is a newer trend because they were not heard first. Youth were not heard previously in the organizations because youth were seen as only learners. They have to learn. But now you can say that participation of youth is more in organizations. Then gender equality, as we have seen already, comes in inequality. Gender equality is slowly rising. So that's why I have given here. Then upskilling. Upskilling is when you find some person who can be more efficient, you give them chance. That is without the hierarchy. That is done nowadays. Then social purpose of any organization. That is also talked about a lot now. Right. With that, we come to the next method of structuring: mechanistic versus adaptive structure. This is also a new trend now. Mechanistic are well defined, right? Whatever I have shown you, vertical structures are horizontal structures are mechanistic, properly drawn, right? Even the organization structures will have lines in colors, so that one color of line will tell something. Like if it is production unit, some color will be used. Service unit, some colors will be used. And helping unit, some colors will be used, right? Like they call it line and staff. Line is the authority where production directly output is given, line. Staff are all the departments who help this line people. So we call it as line and staff. So different colors can be given. So mechanistic is like that structure. Adaptive structures are flexible, like what we have seen, hybrid structures. You can go on adjusting. Even there are structures which are just in circular way, right? There is no boss. The entire organization will work from the contribution for everyone to the center point. There are structures like that also. They are called as adaptive structures, hybrid structures, new age structures, flexible structures. All these are new age, right? Okay. We come to another one topic: formal and informal organization. So, so far, do you have any doubt? Whatever we are seeing, all related to organizing, how the organization works by organizing the people and departments, organizing the resources, organizing the money, organizing the power vested in each department. This is what we are looking about in various topics, various branches of that, right? In that, this is the next one: formal organizations, informal organizations. Formal organization is what we have seen all through. Informal organization is what the people themselves will follow, themselves form, right? They don't have any hierarchy. They don't have any responsibility or authority cascading. What is simply based on relationships, right? Wherever the departments may be, whatever the hierarchy may be, the people forms groups in any organization, right? And those organizations are called informal organization. And remember, this is not to be taken very lightly, because many times informal organizations are as powerful, right? Even though you can see that it is based by themselves, and in that even a low hierarchy person may be the boss of that organization, right? So with that, we come to the conclusion of this one. So we have 2 minutes of time. So can we see a small PowerPoint?
Yes, ma'am. You can continue.
Small case study. If you are tired, I will leave you now. But if you can hear for another 2-3 minutes, we can see a Small case
Sure,
study.
ma'am. We can continue.
Okay, right. So I have given a small case study. I think I told you last time itself that a case study is mandatory one, right? 20 marks question. You cannot run away from that. You have to write it down. Whether you know it or not, attend the question. Are you able to understand? Because if you write for the remaining 80 marks, there is no way you are going to get 50 marks out of that. It is very hard unless you write all the questions in a very good manner. So don't take chance. So attend for 100 marks. Write this 20 mark question somehow. So at least for the attending, you may get some grace marks to get through the examination. So my kind request is kindly attend the C part without fail. Right? How to attend to the case study? These are the simple steps for any theory papers. For any theory papers, you can use this method, right? What we have to do is first identify the real problem. There are two problems to any case. What is the surface problem and what is the real problem? A surface problem is one which can be easily seen. If you just read the case, one problem will come in front of you. That is surface problem. But there may be a hidden problem which is real, right? Read the case twice, thrice, so that you can find the real problem. Okay? Then write it as a small paragraph. First paragraph. Identification of surface problem and real problem. Write as a small paragraph, right? If you are correctly finding out the problem, you are halfway through. What is the second step? Analyze the case now. This is your area, your play area, your playground. You play whatever you want, whatever you think about the case. Analyze and write paragraph by paragraph or bullet points, or you can do it as a SWOT analysis. I think you know about SWOT analysis, right? Strength, weakness, opportunities, and threats. You can divide into 4 analysis, right? You can write the strength of the weakness of the case, opportunities, and threat. SWOT analysis we call. So analysis you can write. This can be 2 pages or 1 page. Yes, Kartika?
Analysis, repeat once, ma'am.
Analysis is what you think about the case, what you have analyzed about the case, right? You can do it as a SWOT analysis. Strength, weakness, opportunities, and threat. This we call a SWOT analysis, right? You can, step by step, you can write the strength of the case, weakness, opportunity, and threat to that particular problem. If you are able to do that, you will be able to come to the third part called recommendation. You can write the analysis in a very describing way, right? You can write 2 pages or 3 pages too. Then recommendations and suggestions should be based on theory. You have to use the theory on analysis. Say, for example, we have seen horizontal structure, right? The case is about a horizontal structure and the chain of command. So now you have to write the analysis that this is based on the hierarchy is not followed, the horizontal structure is not okay, or chain of command. Like that, you have to infuse the theory, find the exact theory matching to that and write. See, after all, remember one thing. Why we are giving case study? Not to listen to the story you are going to say. It is to understand whether you are able to apply the theories into real life problems. Do you get the point? The point of case study is application. You are studying theories and you are going to become managers tomorrow. When you are manager, will you be efficient enough to apply the theory into the real problem? That is what we want to know. Do you get the point? So do that. Make me understand that you are efficient enough to use a theory to real problem. Right? So do that. Based on theory, give some recommendations, suggestions. It can be like bullet points, 10, 15 points you can write. Any recommendation and suggestion. But you can have only one conclusion out of the recommendation and suggestion. Don't bring the conclusion out of the blue sky. Right? You are saying, I recommend these things. Out of the recommendation, take 1 point, write the conclusion, justify the conclusion. You say why I think this is the best recommendation or this is the conclusion, how I can implement this.
Excuse me, ma'am.
Right? So this is how a case study has to be attended to, right? So we'll have a small case study and see how this is written, right?
Hello, ma'am.
Yes?
How many pages we needed to write for the case study? Like,
is it right?
how many pages we need to write for
Anyone please
case study?
Krupa first. Yes.
How many pages we need to write for the case study? The 20 marks?
I don't get your question, Krupa. A little bit louder, please.
How many pages we need to write for 20 marks questions?
No, there are no rules and regulations. No, it is not about how many pages you write. It is about
Okay.
how you convince me that you have studied the
Okay.
subject. That's all.
Okay,
See,
okay,
you can do
okay.
it even in half page. It is up to your
Okay.
efficiency, right? As I told you, you make the first paragraph very small. Analysis can be very big. Recommendation should be in bullet points so that I will read it. Then the conclusion should be one paragraph. Justify it properly. Right? If you
Okay,
can make it
okay.
in 2 pages, 3 pages, it is up to you. Right?
Okay,
Okay. So
okay,
the
ma'am.
case goes like this. See, this is a real-time case actually. Intel has once shipped thousands and millions of chips, the Intel chips in the computer. Okay? Sorry, but I'm able to hear you, ma'am. Kudashia Taskin Magduma, you have anything to say? Magduma, you have anything to say? Okay, right. So what happened after they have shipped these chips? One scientific calculation, that is, I don't remember the exact point. It was around some decimal point, 16, 17 decimal point. There was a small error. That is, if you make 000 point into 17 numbers, the 17th number had a small error. It's a very small, minute error, which the Intel has not, test checked properly. But it was found out by some scientists, some space scientists, I remember, right? So it has come to the public that Intel has shipped up. Intel has sold a lot of error chips. It's not going to affect any of the computer, but still, Intel has a high reputation, right? It is used for rocket science, obviously. So the rocket scientists only found out. So what happened? They have to take a decision now. Already they have shipped over the world. The chips are given to the computers and all over the world. It's a global company. No, even our computers are having Intel chips. So now they have to take a decision whether they have to recall all the chips or go for a new version or what to do. This was a bigger problem the Intel company faced with the small chips once, right? So you can take this case in any perception. If the question is not given, say for example, if I ask this question in a financial perception, you have to see the cost effectiveness. If the same question is asked in human resource perception, you have to see the effect on the employees, how this is going to affect. In marketing view, you have to say how the Intel brand is going to survive. In strategical point of view, what is the decision they have to take to the company's reputation. Are able to understand? So the same problem can be seen in various views. So how the question is, based on the question, you are going to analyze the case. Based on the question, you are going to take up the theory. Right? So this is how you have to write the case studies. In this one, you can see if it is a marketing based question, the surface problem is they are going to face a lot of loss because all the chips are flawed. And what is the real problem? Intel may lose the reputation, lose the market to its competitor. So that is a real problem. So how will you analyze? How do you put the marketing theories in it? How do you come to the conclusion? It is how you will be writing. So if the time permits, we will see fewer more case studies and I'll explain to you slowly one by one before the 8th class. Okay, so that you will also know how to write a case study. So we come to the conclusion. I have already taken 10 minutes because we started late. Sorry for that. If you have any doubts, you can ask me now. Nikki asked one question. Isn't mindfulness also taking care of the employee's psychological well-being, just as the employee's physical well-being is the organization's responsibility while at work? No. Mindfulness is not only psychological well-being. Mindfulness is making the job interesting and engaging. It comes under employee engagement. So if you are making that mindfulness, the performance, the creativity and the productivity will be more. That is what mindfulness is about. It is for the people who are already psychologically well-being, right? Okay. Then any other question? Any other doubts?
Ma'am, all the classes will be on VC?
I don't get. All the classes are?
Will be on video call only, or any physical classes are also available?
No, not for this session. This session is only online.
Okay.
So June classes will be offline too, but I don't think In June also we will have all over India. We may be having in select cities only, because see, after the pandemic we have not yet started. Before pandemic we had centers all over the country, so we were having offline classes, no online at all. We only had offline classes. But because of this, the centers are closed, and now we are again. It is like starting from the scratch, I should say. So next session we will be having some few offline classes at select centers, and also online classes will be going on for those who will not be able to attend to the offline classes, right? But we will decide it later for the June session.
Okay.
Right. Any other question? KK Pataria. No, we don't have any WhatsApp group. Officially, DDE doesn't have any WhatsApp group. All the communications will be through email and SMS, or what do you say, like Twitter, Instagram, like that. We will be communicating mostly through email and SMS. But I would suggest strongly that you visit DDE website often, so that you can see the notifications on time. There is no WhatsApp group, so don't think that any official WhatsApp group is running, right? Okay. So with that, I think we come to the conclusion. Anything else?
Ma'am, how about the attendance? Some 25 hours it was written, no, madam. How about that? Attending the classes?
Prasanna, which specialization you are?
MBA HRM.
HRM.
Yeah.
No, as for now, we are not implementing that. It is optional. Classes are optional.
Okay.
Okay, but maybe from next session onwards, that will be implemented. Okay. Will the case study question in the exams be related to any unit or just organization? Of course, any unit. For this particular paper, you can get case study related to anything in this paper. Like that for any paper, right? Why I told is, see, any case can be given for any subject. It doesn't matter. But case studies can be from that full paper, from anywhere. And you will not be told in the case study that this belongs to this unit. You have to assume that. You have to predict and write, right?
Ma'am, if possible, you can explain the case study with the example, ma'am.
What is it? I don't understand. What is that?
If possible, can explain the case study with the example.
Yeah, I was about to, but as we are running out of time today, I left it as it is. So maybe in next classes we will have. Actually, every session I have designed a case. Last session also we didn't have the time, so I left it out. So in the next session maybe, that is tomorrow. Tomorrow we will make other things shorter, and I'll explain to the case study a little bit more. Okay.
Thank you. Thank you.
Okay. Okay then. So thank you for attending the class. We'll meet tomorrow.
Thank you, madam.
ആണാ അല്ല അതല്ല ഇമ്പോർട്ടൻ്റ് ആയിട്ട് ക്ലാസ് 2 പേപ്പർ നല്ല ഇമ്പോർട്ടൻ്റ് ആയിട്ട് പറയൂല എന്താ ശ്രദ്ധിക്കേണ്ടത്, അത് പറഞ്ഞുകൊണ്ട് തീർന്ന കേൾക്കാനായിട്ടൊക്കെ കോൾ വിളിച്ച് ഞാൻ കണ്ടു. കഴിഞ്ഞിട്ട് വിളിക്കാൻ കാരണം ലാസ്റ്റ് ആകുമ്പോൾ എന്താ പറയുന്നതെന്നില്ല, ഇങ്ങനെ എക്സാം ചെയ്യണം. അത് കേട്ടപ്പോൾ ദേ വിളിക്കുന്ന ഒരാള് വരുമ്പോ
Hello, good afternoon. Can you hear me?
Good afternoon, sir. Good afternoon. Yeah, we can hear you.
Yeah, thank you. There was some technical issue, so it took me a minute or two to join. Not a problem. So we are here in the third class of managerial economics, and we'll be discussing mainly two topics today. First one will be related to demand estimation and forecasting, which will briefly take some time and try to finish as early as possible. And this is the part, it will be part of the first module, last topic in the first module. And then further, we'll move down to the second module, wherein we'll cover the entire of production analysis, so that we are ready for cost analysis and markets in the coming classes. I hope that's good. So what I'll do is that I'll share my screen. So this is managerial economics, madam. If you are, so this is the class for managerial economics. And in the last class, in the last week, if you remember, we my colleague was there and he had covered module 1, wherein he had discussed, I believe, the consumption theories, the basic an introduction, followed by consumption theories, utility function, elasticities, demand, supply, all those basic things have been covered up in the last class. So we'll come to the empirical part of demand estimation today, followed by production analysis. So I'm just going to share my screen. I think there is some problem in screen sharing. Let me just give me a second, please. Is my screen visible to all of you?
Yeah, we can see your screen.
Yeah, thank you. So we'll start with business decision making, that is estimation of demand as well as forecasting the demand. Now we all know whatever business you are involved in or you are going to be involved in, a very important aspect of any business that you will be working with is that we should be able to gauge or analyze that how much is this business going to grow in the future. Now when we are trying to analyze how much of business is going to grow in the future, it also depends on how much of basically sales that we are going to, or the particular firm is going to incur. And accordingly, if you have to incur sales, what you have to do in the first place? Production. So for selling, you have to do production, and therefore the selling in the future, for forecasting the future sales, you have to also forecast future production, and therefore how much of quantities of goods that go as inputs have to be forecasted. So forecasting as such is an important aspect of any business firm. For that reason, even if you think about household as a small entity and a firm, then we all know that what we are going to say cook tomorrow and in the days in the future, what do? We accordingly provision our groceries, and accordingly we have to make some forecast. Say suppose if some guests are coming over and we know that they are coming, then we accordingly again need to make changes in the amount of groceries and all other provisions that we need to purchase, depending on all the considerations that we have, right? So it can be based on whatever past we have observed, how much of output is that the firm is producing. Also depending on in the past, say suppose if it's a holiday season, say suppose Diwali or Holi, like now Holi is about to come. So if some sort of seasons are coming, festive seasons are coming, then if will be an increase in the demand, or if there is an off season, will there be a decrease in the demand? So accordingly, it's very important that any business firm is able to forecast future sales, future demand of their goods and services, and therefore before they can forecast for the future, they must be in a position to estimate what they are producing now, how whatever is their demand right now, and what are the factors which affect the demand that they are incurring right now. Say suppose the current demand for I'm running a firm, and the current demand for my products per month, say suppose is close to 2 tons. Then and if I know that okay, there are some 10 different factors that can affect the current demand, and if I know these 10 factors which can possibly affect my my sales or demand in the present, then with some level of probability, there is some level of error, I will be able to predict in the future. By prediction I mean forecast in the future that what will be my future demand. Therefore estimation of demand is very, very important before we can forecast the demand. Okay, now when we talk about demand forecasting, there can be different types of or the categories in which we can divide the demand forecasts. The first one is at the level of like we can just check that at what level are we making the forecast. Are we only concerned about our given firm? Say suppose if Maruti Suzuki is only concerned about their own demand of of the cars that they're producing, so that's the firm level forecasting. Or they are concerned about the entire automobile industry in the country, what will be the growth of automobile industry in the future. So now if you hear with the boost in EV technology, there is a forecast that the demand for e-vehicles, EVs will increase in the future, and therefore you have new players which are coming in, and even the existing players like Tata Motors and Maruti, what they're doing is that instead of maybe going for an entire EV, they are going for some sort of a hybrid model of cars. So that's like an industry level forecasting which they are doing. Further, what can also be done in the entire economy or the macro economy, what sort of increase or decrease in the demand will happen in the future, that can also be forecasted. Now, please understand, it's important that the factors we understand. So the person who is doing the forecasting exercise, the production manager, or you will have tons of data scientists sitting who will be doing all this analysis. You might also take a role of data scientist. Now, what I'm trying to tell you is that the factors, as I was talking about, there might be different factors which affect the demand or sales of a given firm at a given point of time. But the same factors may not be relevant for firm level, may not be relevant for industry level. So suppose if there are 10 factors which are relevant for considering when we want to understand the level of output of cars of Maruti Suzuki in a given year, the same factors may not be relevant when we are talking about industry level, because in industry level, those 10 factors plus or minus few, and then there will be some other additional factors which will also come in when we talk about the industry level forecasting. Then when we go to economy level forecasting, it might be even higher. So the level of, as the level increases, the number of factors to be considered for forecasting also increases, and the complexity associated also increases. Further, we can also categorize demand forecasting based on time period. Are we looking at short-term forecasting, or are we looking at long-term forecasting? For example, are we looking at the next quarter, how much are we going to produce, or the next year, how much are we going to produce, or 5 years down the line, how much we are going to produce, and what new vehicles are we going to say introduce in the next 2 to 5 years. So that's the time period categorization. Further, we can also forecast depending on the types of goods that we are producing or the type of goods that are being produced or sold in the market. So it can be consumer goods or capital goods. The factors, again, the important point is factors that can affect. So the factors which affect the consumption or the demand for consumer goods will be very different from the factors which affect the forecasting of or consumption of capital goods, because capital goods, the forecast, the say suppose the trend in the growth of capital goods, demand for capital goods may be slightly stable, as it is largely demanded by the industries which are using those capital goods for producing consumer goods. But the consumer goods demand might be very volatile depending on seasonal factors and a lot of other factors which define the taste and preferences. So you know that during the COVID pandemic, what happened? Suddenly there was a sharp fall in the demand for consumer goods, whereas there was a fall in capital good demand, but it didn't fall by as much as the fall in consumer goods. So there is always a difference in the categorization there. Now, let's look at some of the methods that might be employed for estimating demand function, because as I have noted already and discussed with you already, that before we can make any forecast, it's important that we are able to estimate the demand function properly. If you are able to estimate that in the current period, what is my demand, what is the demand of my firm, what is the demand of my industry, then and only then will we be able to properly forecast what will be the demand in the future. Okay, now there are a lot of different techniques. If I can bring your attention to this flow chart sort of a thing. So there can be survey methods or statistical methods. Among survey methods, you have consumer intention surveys, which might be categorized further into what type of consumer goods are we looking at, or producer goods are we looking at, or mixed goods. So it's a mix of both consumer and production goods. Further, instead of going directly to the consumers and checking about their intentions about consumption, we can what the forecasters can do, that they will directly go to experts. So there will be market experts. Say suppose if there is a, let's take, I'm CEO of a firm who is into automobile manufacturing for the past 10 years. Like that, like me, there will be another 10-15 other experts who are at top management positions, and they understand the automobile segment, automobile industry. All these are considered as experts. So they might be put in a room and they'll be handed some questionnaires, or they might be given some sort of an interview. They will be asked on some interview on some set of questions and try to gauge their opinion about the current demand and the future demand. Okay, so that's like the expert opinion. Then we can also what we can also conduct are market experiments. So there can be test experiments, test market, or laboratory. So I can give you an example. Like certain times what happens is that some typical type of consumer goods will be introduced in certain markets but not in other markets. So recently I remember there was this particular if you remember this Maggi, what they were doing, that they had come up with multiple different flavors of Indian spices, Maggi spices, and they were targeting certain typical markets for certain spice mixes. Say suppose the Punjabi tadka was being introduced in the northern belt and certain parts of the western market. Some other flavor was being introduced in some other market, and they were trying to gauge the consumer sentiment, that how much they are buying those goods in which market, and therefore they can actually test in a real-time situation that what sort of product demand is more. And accordingly what they can do, that if they have introduced 10 different flavors, those flavors which did well or whose demand was more in certain markets, they will only target those, say suppose 4 or 5 flavors after maybe 1 year of testing, that okay, 10 we have introduced in the first place, 5 were not demanded much, scrap it off. 5 which were demanded well in certain markets, accordingly introduce them to those markets. So that's like a test market. There could be laboratory simulations also. Say suppose like in Amazon Go markets, you can see, or some sort of what we can say, an artificial marketplace can be created, wherein you might be aware of those mock stock trading like that happens. So what similar sort of laboratory simulations are also done for gauging market sales, that okay, you are given say 10,000 rupees, and which is not actual money which is given, and then what sort of goods will you purchase? Let's try to gauge that. But what happens is that these test market gives you better result than laboratory simulation, because in laboratory simulation, those people who are undergoing those, like the consumers who are buying and selling commodities, they are aware of the fact that they are part of an experiment. But in a test market situation, wherein certain goods are introduced openly in the market without the knowledge of direct knowledge of the consumers that they are part of a test, what they do, they will respond more representatively. So test markets are better, give you better results, but please understand that they are more costly, because you have to target a lot bigger market, which will require a lot of resources to be employed, bigger cost. Laboratory will give you some sort of an idea, but not that great, but it's cost effective. Further, we have other statistical methods like extrapolation, leading indicators. Some econometric methodologies are also there. Say, suppose we have already understood that there is a particular trend which is being followed, like all the goods that all my goods that I'm producing follow a certain trend. Now, if the trend continues in the future, assuming that the same trend will continue in the future, we can make a forecast of the given demand. So that can be, so we can have a trend lining or a smoothing. So there is an exponential smoothing, simple smoothing. Then we have ARIMA methods, auto-regressive moving average methods, or within which we also have regression analysis and simultaneous equation model. So in regression analysis, what do? We basically take data on, say, suppose I can collect data from 1990, or let's take beginning of this decade, so 2000 till 2022, what was the demand for my commodity. Then I can take data on the various factors. For example, what has been the change in price of my commodity, what has been the change in price of my substitute. Say, suppose if Maggi is looking at forecasting its demand, so what is the demand of Maggi, annual demand, or let's take quarterly demand of Maggi. Then they can also take the price of Maggi that has varied over the time. You know that it was somewhere, if you remember, somewhere around 5 rupees or so. Now it is selling at 12 rupees, 15 rupees, even higher rates we have Maggi. Now they can also check during that period what was the price of the competitors competition that they had. Say, suppose ITC has Yippee and all other noodle brands. So what is their price? Then in which market they are introducing. So there can be some sort of a variable to indicate the market in which they have introduced. Say, suppose, are we introducing in north, south, east, or west? Or suppose there can be state variables. So if state equals to Maharashtra 1, if state equals to Madhya Pradesh 2, like that, there can be some variable like that. And then they will estimate a regression model, assuming that this regression model will give you an idea that demand is a function of, the demand which they have got is a function of, if you can see somewhere I put, okay, if demand will be a function of certain factors, and in the future also these factors will affect the demand, and therefore in the future also, if these factors remain true, the demand will grow at a certain rate. In simultaneous equations, what do is that we bring in all the various factors which can affect the demand and other related factors put together in a system of equation. In simple regression, we have a single equation, but in simultaneous equations, we have multiple equations which can tell me that what will be the future demand, what should be the future price, what should be the future demand of my competitors, what should be the future growth in the industry, like that. So we can bring out a variety of factors can be assessed in a simultaneous equation model. So these are just some of the points that I had brought, which I have already covered. So it can be actual versus simulated consumer interviews. Then market experiments can be conducted, as I was talking about Maggi case, and then the regression methods can be used. So the main steps in any regression is first to identify what variables are required for identifying the demand. So the demand of Maggi will be a function of price of Maggi, price of Yippee, Then what is the general growth of the FMCG segment, then what is, in which state are we targeting, like that. So all the variables you identify, then you collect historical data, as in past data on all the variables that you have identified in the first place, then choose an appropriate function that will define the demand function. So it can be a linear function, it can be a reciprocal function, it can be a log function. So log of demand is a function of log of price plus log of price of Maggie plus log of price of EP plus log of price of state, log of the growth of industry, like, and so on and so forth. And finally, we estimate the function and make future forecast from there. So that's all about the demand forecasting. If you have any questions, you can ask me. Then we'll very quickly move to the next topic that we have, production analysis. I can see certain hands are raised. So are those for question that they're asking questions, or they have just raised the hand?
So can you repeat the simultaneous method?
Okay, so basically what happens, you understand the fact that demand as well as, so the demand of my commodity is a function of the price of my commodity, and as well as the function of the prices of other commodities. But please also understand that the price of my commodity is a function of the demand, right? So price, whatever is the quantity demanded is related to the price that I'm charging, but the price that I'm charging is also related to the quantity that I am demand, or whatever is the demand of my commodities. So demand and price, the quantity demanded as well as the price, are functions of each other. So they both affect each other. Now, I can give you a small example. Now, you remember when Maggie was banned in 2015-16? So during that time, what had happened is that the demand for Maggie basically completely collapsed. But at the same time, it was expected that the demand for their competitors like Yippee or Vai or whatever instant noodles you can think of, their demand will increase. But it didn't happen much. The entire market segment collapsed. The entire market for instant noodles collapsed. And I was talking to one of the executives who was head of FMCG segment for ITC, which manufactures Yippee and all. They said that the crash of Maggie also led to a fall in their demand for their commodity. So the demand of commodity 1 is also a function of demand for commodity 2. So when you have such a situation that both the variables, demand of commodity 1 is related to demand for commodity 2, demand for commodity 2 is related to demand for commodity 1, they both are related to each other, then estimating a single equation where I'm estimating demand for only commodity 1 is faulty. So what you can do is that you have multiple equations wherein all the variables that can possibly affect each other, you bring in together, and in a system you estimate the equations and therefore make a better forecast as compared to a single equation. Does that make sense?
Okay, thank you, sir.
Okay. Any other questions that we have? No? Okay, so then I'll move to the next one. Which is about production analysis. So, although I have written production and cost analysis, today we will be concerned only with the production part, and in tomorrow's class, the same time, we'll talk about cost analysis and then move to the market part. Okay. So, the first important point is to understand what do we mean by production. Okay. And the basic fundamental function for any firm to exist is that they want to produce one or more goods or services and then use that produced goods and service to sell in the market. Say suppose any firm that exists, they might be either producing some good or they might be rendering some services. Okay, so at the end, what do they want to do? They want to produce that good or service and then finally sell it so that they can get some revenue from that. While they undertake the process of production, They will have to use some inputs that go into the production process. And for using those inputs, for employing those inputs in the production, they will have to purchase those inputs. That incurs costs. So please understand this entire dynamic. So in the first place, whenever a firm is set up, what they have to do, they have to employ certain factors of production, which we also call as inputs, some factors which can help you in undertaking the production process. While while the production managers, or while, say, suppose I start a firm, when I start a firm, I use these inputs for undertaking the production process. And when I buy these inputs, I will incur a cost. So, and in the first place, I will incur a cost in procuring those factors of production. And after procuring those factors of production, I will use those factors of production to undertake the production process. And after the production has taken place of whatever goods that we are producing, or the services that we have come up with, which we will be using, now once they are done, what happens is that these services or goods are sold in the market. Why are they sold in the market? So that by selling, they will get certain revenue or proceeds from the sale. And entirely the objective is, what is the objective? The objective is that by selling, the revenue that they get should be higher than the cost which they have incurred in the production process, and therefore profit can be incurred, which is defined as the difference between revenue and cost. Okay, so before you undertake production, you procure factors of production or inputs, you incur a cost in procuring those factors of production, you undertake a production process, and after the production process has been done, you use those you take those finished goods and or services, sell in the market, get revenue or proceeds from that sale, and the revenue should be higher than the cost in order to give you some sort of a profit. Now, it's not necessary always that how much of profit you get, the net profit that you get, will always be positive. Okay, there can be a net gross profit. The difference between gross and net is that you might be showing that yes, your revenue is higher than whatever cost you are incurring, but the revenue that you get, the total revenue that you get, if you are using up more than the revenue in the next phase of production. So when you say, suppose you get 100 crores, now this 100 crores is the revenue that you have get. If out of that 100 crores you have a gross profit of say 80 crores, now in the next round of production, what will you do? You will take this 80 crores and you will put it, maybe a portion of 80 crores or somewhere more than 80 crores you might be putting. Now, for all those of you who might be watching Shark Tank or anything in the on the TV, you might see that they will talk about what is your gross margin, what is your net margin, what is your burn-in, right? So there is a gross profit, which is the gross margin, but there is also a net margin, which is the pure profit which they get. Okay. Now, from the gross margin, you will be using a certain portion. So out of that 80 crore, what do? You use a part of that 80 crore for advertisements, for purchasing goods and services for the next round of production, for all other costs that you have to incur for the next round. Now, if you still have a certain sum of money left from that 80 crore after spending everything which is required for your next round of production, you have a positive net profit. But if you have 80 crore but you are using 90 crores for the next round of production, you have 10 crores which you have burned in, and your net profit is basically negative. So net profit can be negative even though you have a positive gross profit. Anyway, let's get back to the basic production process. Now, when we talk about production in economics, it can have very different meanings. Nonetheless, the basic way that we define it is that production is a process through which we take certain inputs and then we use them, we convert them into some other form of output and then sell it in the market in the form of some tangible goods or intangible goods. Okay, say suppose if certain crops, let's take wheat is being produced. So farmer is a producer of wheat, wherein which he has or she has used land, labor, then certain seed inputs, capital, all those things have gone in. Now this wheat is the final produce. The wheat is final produce. Now this wheat will be taken as input by, let's take ITC or Fortune, all these firms they will take, and then they will, what they will produce, they'll produce maida, they'll produce atta, they'll produce all sort of other biscuits and everything, which will be output for them. So for every stage, for every producer, there are certain inputs which they act to produce certain outputs. Okay. Now, in case of services, the output is basically happens. The output happens only and only when we render that service. So a lawyer may be knowing a lot of laws and everything, but it's only when they practice law and get the money for practicing that law is when they're rendering their services. Okay. And finally, that, as I had told you in the last point here, is that every firm at the end of the day, why are we studying, what is the significance of studying production analysis, is that every firm must understand or must be aware of the fact that if we are undertaking any production process, then what are those factors of production that we require for undertaking this production process? In what quantities do we need those factors of production in undertaking that production process? What will be the cost incurred in procuring those factors of production? What will be the output that we will get after this production process? And when we sell this output, what type of, where we will sell, and what revenue are we going to get after the entire sale process of selling? Okay, so production as such might seem that it's only concerned with input and output, but the entire production analysis is broad based, as in it has to start from the conceptualization of what are we going to produce, then what will be the market, what will be the cost, what will be the profit from it, what sort of techniques will we use, in what proportion are we going to use, what types of manufacturing facilities will we use, in what scale are we going to produce. All those things have to be considered before we can actually get into production process. Okay, now let's take a step further and try to understand that what is a production function. So as I have told you that every production process requires a certain level of inputs, and then there will be a certain level of output which will be produced by using those inputs. Right? So a production function, when we talk about, so we can always assess production, theoretically or in some sort of a mental way, that okay, we'll be using these goods, these inputs, and to produce certain output. But we have to lay it down in pen and paper so that we will be able to conceptualize it properly, and further, just what we have discussed some time back, estimate the production process, estimate the production, and as well as make forecast for future production, because whatever you produce, accordingly your demand will be done. So for that reason, depending on your demand forecast, you will also have to undertake production process. So for that, we also, like what you have studied, demand function, which we use for forecasting demand. We have a production function, which we'll use for forecasting production. Now, if you think of production as Q, the output, the level of output which is being produced, Q, which can be a function of various inputs. It can be a function of labor, land, capital, managerial techniques, and technology. So in general, if you think of a production process, we have identified 4 different types of inputs. First one is land, second is labor, third is capital, and the last one, generally, if you see your books, it will be written as entrepreneurship. But now, since you understand that it's not only the entrepreneurial skill which is required in modern day firms, it's the managerial skills which are mainly required. So we have tweaked that in the entrepreneurship skills in managerial skills, that how better can you manage the entire production process in order to have better output. And it also depends on the state of technology that you use. You understand that the technology which is used in handloom mills will be different from the power looms, and therefore the output in power looms will be much higher than what you get output in the handloom mills, right? So that's the basic idea. So we will be able to quantify the level of output as a function of the levels of input that go into the production process. Now, generally, when you talk about or understand the production function, instead of complicating it by taking all the various factors which go into the production process, we mainly consider variables which are labor and capital. Why are we not considering others? Because those things are generally not going to change much in a given period of time. So once you have acquired a parcel of land in which you have to set up the plant, that's not going to change so easily. It will take a longer period before which you can think of again buying an extended parcel of land and then adding another production unit. Further, that's the case of for managerial skills also. Once you have hired a set of people who are managing and the people who are looking after once you hire them. Further, when you have set in the rules and regulations which will manage your entire firm, your HR rules, your other rules that are there, they do not change so easily. So we generally assume them that they remain unchanged for a longer period. So what changes are labor units that you employ and the capital that you infuse. Okay, so we generally define the production function Q as a function of L and K, where Q stands for outputs in units as in tons, in meter or number. L stands for labor measured in terms of workers that are employed, say man or human days or man hours. So if a person is working for 8 hours a day, we say that they have worked for 1 man hour, right? So one man day is equal to 8 hours of work. Like that, we can define the labor units. K stands for capital. Generally, we define it in monetary terms or rupee terms. Okay. Moving ahead, there is always this question about short run versus long run. That what is short run and what is long run, and what happens about production in the short run and what happens to production in the long run. Now, generally, when we look into the part of managerial, so you are all studying this managerial economics, but managerial economics, if you understand, is basically a balanced mix of both microeconomics as well as macroeconomics. So what we are studying right now, all these theories which are related to consumption, production, cost, firm, all these are theories which come under the general ambit of microeconomics. So in microeconomics, short run is generally defined as the period during which at least one of the factors of production is available in fixed quantity and at least one is a variable and one in a variable quantity. So it can be looked in either ways. So the idea is that at least there will be one variable. By what do I mean by variable? In the production case, one of the factors of production, one of the inputs which can be varied. If one of the inputs can be varied, then we say that it's the short run, but the other factors should be fixed. So suppose if we have a production function like this, Q as a function of L and K, if suppose capital cannot be changed, so you know that you have already provisioned that in the next 1 year, we are going to spend, let's take 200 crores of capital, we are going to infuse 200 crores of capital in the next one fiscal year, then we have fixed that 200 crores of capital will be infused. We are not going to change it much, but the labor units can change every day, every week, every month, depending on the frequency with which you are changing. So during the entire year, labor units can change. There can be seasonal changes in the labor that is being infused, but capital is not going to change. So what happens in the short run? The short run is the period during which one of the factors of production is variable and at least one of them is fixed. But in the long run, all the factors of production which are being considered are assumed to be variable and none of them are assumed to be fixed. So you can change the quantity of labor that is being employed, you can change the quantity of the amount of capital which is being employed. Both of them can be changed. Okay, so it can be changed. By change I mean it can be increased or it can be decreased. Is there any question?
Sorry, sir. Your screen not visible. Someone is shared because of that. You are presenting as.
Okay. 1 minute. Is it visible now, sir?
Yes, sir. Yes.
Thank you so much. I hope you are able to follow. I'm not going very fast. You are able to catch up.
Yes, sir.
Yes, sir. Yes, sir.
Okay, thank you. So short run is the period during which one of the variables can change the other variables, or at least there will be one of the factors of production which is fixed. But in the long run, everything is allowed to change. Okay. Now moving ahead, if we talk about a short run analysis, let's take, as I was talking about, let's take that the capital amount is fixed. So we put a bar on top of K. So Q is a function of L, which is the labor units which we are using, and K bar. So if you think when I say K bar, we are assuming that the amount of capital is fixed for the given period, which is being considered as short run. So suppose if K is assumed to be 2 can be anything, 100 crores. So if it is 200 crores, if I say that the unit or the unit of measurement is in hundreds of crores of rupees, then if K equals to 2, it means 200 crore rupees it has been fixed. Okay. Now if the K value is fixed and if you change L, what will happen? Depending on the type of function that we have, there is a small error which happened, as in I'm unable to use my tablet to show you, do some math and show you here. But please understand that, say suppose Q has been defined as 0.75 into L plus 0.6 into K plus some 3 or 4. You have some sort of a function which is defined, like a mathematical function is there. Now, if you keep on changing the value of L, which is labor, what will happen? Output, which is Q, will keep on changing. So what do you observe? That Q, which is the output, is changing only due to change in labor. So this is like a short run production function. Okay. But in the long run, yeah, you can see here in the long run, say suppose if this is a production function which is given as 1.01 L to the power 0.75 K to the power 0.25, and both K and L are allowed to change. So along the column, what do you see? We have L. So L can go from 0, 1, 2, 3, 4, 5, 6 up till 10. And capital can also go from 0, 1, 2, 3, 4, 5, 6 up till 10. Now, if you put on these, give these values of L and K in this production function that you can see on the screen, what do you get? You get different values of Q, which are defined in the table. So this is like a tabular representation of a long run production function. This is a tabular representation of a short run production function. Okay, these are both tabular representations. We are showing in a table form what is the level of input which goes in, and accordingly what will be the level of output which comes out. But if we put them in a geometric representation or a graphical form, what do you see on the left hand side? What do you see is that along the x-axis we have only labor. So only one factor of production, which is labor, is changing, and along the y-axis we have output, which is output. So this is the short run production function, wherein as the labor units increase, the output also changes. So this is a short run production function, and this is given for K equals to 2. If K equals to 3 comes, if you change the K, this line will shift up or shift down depending on whatever is the production function. Okay. But when you talk about long run production function where both L and K are changing, then along the x-axis you have labor units, along the y-axis you have capital units, and these lines that you see, these downward sloping non-linear curves, or what do you say, some sort of U-shaped curves that you see, which are convex to the origin, what we say, these are called isoquants. So what these isoquants basically represent, that depending on the level of labor and capital which are being employed, what is the level of output that is being produced. So Q equals to 91 that you see is represents the isoquant which is consistent with output equals to 91. Q equals to 122 is the isoquant wherein which is consistent with the level of output of 122 units. Units can be tons or anything that we have seen. Okay, so along the different along any given isoquant, what happens? The level of output remains the same, but the proportion in which labor and capital are being used will change. So along a given isoquant, the level of output remains the same, but proportion of labor and capital or units of production will change. Now, there are some basic concepts that we should understand. First one is isoquant, as I have already discussed. Isoquant or equal output curve. So each isoquant gives you a given level of output. So along an isoquant, the level of output remains the same. Please remember, isoquant, quantity is constant. Along a given isoquant, level of output remains the same. And how is this output being produced? By the combination of those two inputs, which is labor and capital. Further, we also have something called an isocost curve. I'll show you isocost curve further. And what does it show? It basically represents the combination of labor and capital that will come at a given cost. So cost remains the same. So if I show you here, let's see here. So you see this line, this linear curve that you see, right? This linear curve. You have non-linear isoquants. The linear line you see is the isocost curve. So isocost curve, you understand that whenever you have to undertake production process, what do you need? You need inputs. Inputs will come at a cost. So every input comes at a cost. So if I'm changing the proportion of labor used and capital used, the cost employed will also change. So if I decrease the level, the amount of labor, I'll have to increase the amount of capital to be employed. If I increase the amount of capital, I'll have to decrease the amount of labor employed, which is basically represented by the downward sloping nature of isoquant as well as the isocost curve. That if you increase the input of one quantity of one input, you will have to decrease the quantity of other input. If you increase the quantity of labor, you have to decrease the quantity of capital. Okay, so this is very important for you to understand that along an isoquant as well as isocost, the level of quantity and cost remain fixed respectively, but along the isoquant and isocost, the proportion of capital and labor will be different. Okay. There is also the concept what we call as marginal product, physical product, or marginal product, which is basically the change in output due to change in input by one quantity. Say suppose if I increase labor by 1 unit, which leads to 5 unit increase in output, then we say that marginal product of labor is 5. Okay. Average physical product is the overall output divided by the total input. So suppose if I'm producing 100 units of output by using 50 units of labor, then I can say that the average product of labor is 100 upon 50, which is 2. Okay, so that is the difference between marginal product as well and average product. Now, there is a very important concept, which is the marginal rate of technical substitution between labor and capital. It basically measures the rate at which firm must reduce the units of capital or add the units of capital in order to keep output unchanged when labor is increased or decreased by a very small amount. So please understand that along an isoquant, output remains fixed. And I have just now told you that if you have to increase the quantity of labor without changing the level of output along a given isoquant, what do you have to do? You will have to decrease the amount of capital employed. Okay. So basically MRTS tells you by how much do we have to change the capital, increase the capital or decrease capital, if we are going to increase or decrease the amount of labor. Therefore, MRTS basically defines the slope of this isoquant. The slope of isoquant is defined by MRTS, or marginal rate of technical substitution. Similarly, And this is defined as dk upon dl. Dk is change in capital employed upon change in labor employed, and this is also given as minus of marginal product of labor upon marginal product of capital, and it is a minus sign because it is downward sloping. If it was upward sloping, it would be a plus sign. Since it's downward sloping isoquant, so we have a minus sign associated there. Then we have the concept of input elasticity. It is basically like you had price elasticity of demand you have studied in the last class, which was basically change in the quantity of product demanded due to change in price. Here we have percentage change in the output due to percentage change in the input. Okay, so the same concept applies here. Now we come to a very important thing, which is the law of variable proportion. Now, what is the law of variable proportion? It is basically related to the production which happens in the short run. Okay, and it basically states, so you can read the second point, which is I'll read out the second point, which basically entails the entire law. So under this law, as more and more units of the variable input are employed in the production, given fixed input, so there will be an input which is fixed. So given the input which is fixed and without changing that input, as the variable inputs are increased, what happens? Initially, the production will increase at an increasing rate, then it will increase at a diminishing rate, and eventually there will be a decline in the rate of production. So the law of variable proportion states that when the level of variable factor increases, the production process will first increase at an increasing rate, then it will increase at a diminishing rate, and eventually it will start declining. Most of the firms operate at the second stage, where the output increases at a diminishing rate. Therefore, it's also known as law of diminishing marginal returns. It also has a name which is known as law of variable marginal return. So if you search anywhere, all these three names will appear synonymously. Okay. Now, if you understand, so I was talking about three stages. So you can see that on the top panel, we have TP. TP is nothing but total product or the output. And you can understand that the top panel is the same curve that you had seen here, 1, 2, and 3. Okay. So you have top panel, which is TP or output. On the bottom panel, we have MP, which is the marginal product, AP, which is the average product. Now, you have to understand basically the boundaries of stage 1, stage 2, and stage 3. So you can see that in the stage 1, the curve is increasing. TP curve is increasing at an increasing rate. So you can see that marginal product also increases and it reaches its peak, and then it starts falling. The point where MP equals to AP, where MP equals to AP and AP is at its maximum, there stage 1 ends. Stage 1 ends where AP, average product, is maximum and AP equals to MP. So at the end of stage 1, MP will intersect AP from above. Therefore, during stage 1, MP is greater than AP. These are the points that you must remember. Marginal product is higher than average product. In stage 2, what happens? It increases. Total product is increasing, but it is increasing at a diminishing rate. Therefore, you can see that marginal product is falling, as well as average product is also falling. Okay, but in the third stage, its TP is declining, and therefore marginal product will also become zero. Generally, third stage production does not take place because the firm will close down. Production generally takes place during the second phase, as a part of first phase, but largely in the second phase. And these are the factors, that indicators that you must remember. At the end of stage 1, AP is maximum, MP equals to AP. At the end of stage 2, MP equals to 0. During stage 2, AP is greater than MP. So in stage 1, MP is greater than AP. In stage 2, AP is greater than MP. You can see in the bottom graph that AP curve is higher than the MP curve. So AP is higher than AP. Okay, so this is about the law of variable proportions. Then in the long run, you must understand that what will happen, both labor and capital keep on changing. And then therefore what must happen, that the production manager has to consider both production, how much we are going to produce, as well as how much of cost is being involved in the entire production process. Okay, therefore we have to realize that generally, so this is, please understand that what I'm talking about right now is just a static analysis. Okay, in the static analysis, the equilibrium exists where the isoquant is tangential to the isocost line. Therefore, in the curve that the graph that you can see on your screen, the equilibrium occurs at point E, not at point A and B, because you see that where Q less than 22, so the bottommost isoquant is consistent with output less than 122 units. The middle one has output of is consistent with output of 122 units, and the topmost is output of 120 is greater than output of 122 units. Now, if production occurs at point A, what do you see? The cost involved in producing at point A, E, and B are the same because they are along the isocost line. Isocost line is the linear curve. So along points A, E, and B, the cost of production remains the same. But the actual production will happen at E because at A and B, the output is lower than point E. At point E, the output is higher because it is consistent with the higher isoquant, which is Q equals to 122. So in the long run, the actual production happens where the isocost line is tangential to the isoquant. This is what you must remember. The slope of isocost line is given by PL by PK, which is the cost of labor upon the cost of capital. And you know that the slope of isoquant, as we had talked about, is MPL upon MPK. So at equilibrium, MPPL, which is MPL upon MPK, should be equal to PL by PK. Okay. Nonetheless, in the extreme long run, when we talk about not only in the static long run, but in a dynamic world, in a dynamic firm setup, you know that the situation, the business environment keeps on changing, and therefore in a dynamic world, and when they have to keep on, when the production managers and everyone have to keep on planning about what they are going to do, they have to consider two things. First thing is about the relationship between output and in production cost must remain at their optimal level, whatever long period that we see. So if we are looking at 1 year, 2 years, 3 years, 4 years, 10 years, 15 years down the line, at every point of time, the relationship between output and cost of that production, how much we are producing and what cost we are incurring in that production process, must be at their optimum. What is that optimum? Cost, isocost should be tangential to isoquant. That they must consider at all times. Second thing, they also must consider the relationship between input and output, as in what proportion are we putting the input, and therefore, say suppose if I increase the input by 2 units, by how much times will my output increase? So these two concepts are can be summarized in two concepts, which is the expansion path point 1, and second one is the returns to scale. So I'll just take 2 minutes before I finish. So what do you see here is a graph where you have multiple isocost lines. So C1, C2, C3, C4 are various isocost curves. Q1, Q2, Q3, Q4 are the various isoquants. Now all the points where isocost curve and isoquant are tangential, if we draw a line which is showing the locus or which joins all these points, which is basically OP basically will represent all those points at which even if the cost increases, the output will increase in the long run. So that will be, all those are optimum points in the long run, and that is what we call as the expansion path. So the firm should target at operating always at their expansion path and not anything on the other side of expansion path. So the firms must always operate along the expansion path, which defines the equilibrium relation between the output and cost. Output product, whatever you have produced, as well as the cost. Then we have finally the concept of returns to scale, which basically measures that if we increase the input by a certain proportion, by what proportion is the output going to change. So there can be increasing returns to scale, where if the input is increased by, say, a certain amount, the output will increase by more than the increase in input. Then we can have constant returns to scale, wherein if you increase input by twice, output will also increase by twice. Then we have decreasing returns to scale. If you increase the inputs by twice, output will increase by less than the increase in output. So if you just look at these three, it's just a numerical question to help you understand the returns to scale. So we have three different types of production function, which we call as the Cobb-Douglas production function. Cobb-Douglas production function is Q is 50. This 50 is basically the level of technology. So if this changes, or we also call it as the total factor productivity, TFP. Okay, so if this constant increases, the factor productivity will keep on increasing. That's a different thing. We'll focus now. You see, in the first function, the power of L is 0.3, power of K is 0.5. The sum of the powers is 0.8. In the second case, 0.4, 0.6, the sum is 1. In the third case, sum of the power is 0.5, 0.6, 1.1, which is greater than 1. Now, what we have done, we have just calculated. I will share all these things and I will discuss maybe tomorrow also to start on with. Here what we are doing is that we have taken initially L as 10, K as 15. Then we increase the labor by 20, which is double of 10, and K by 30, which is double of 15. When L and K, the sum of L and K elasticities was less than 1, what do you see? Initially it was 390. But after that, after we increase by double, it is less than twice of 390. So it is, we say that it is decreasing returns to scale, where alpha plus beta is less than 1. What is alpha? 0.4, 0.3, beta is 0.5. Alpha is basically the power of L, which we also call as the elasticity with respect to L. Beta is elasticity with respect to K. In the second case, when the sum was equal to 1, output increases by 637 in the first case, it increases by 1274, which is just double. So you see that when you increase the input by twice, output increases by twice. In the final case, when input increases by twice, output increases by less than twice. So that is the decreasing returns to scale. So that's all for today.
Sir, I have one doubt, sir.
Yes, sir, please.
Sir, are we having attendance for this Google Meet?
Sir, that I think there will be someone from the DD to capture that, I believe that.
Sorry, sir, I can't able to understand.
Attendance is happening, sir.
Okay, sir.
Okay, so I'm ending the class here today, and we'll meet tomorrow 2 to 3 p.m. for another session of managerial economics.
Thank you, sir.
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 Hello, students. Hello.
Yes, sir. Good afternoon, sir.
Sir, good afternoon.
Yeah, good evening to all of you.
Good afternoon, sir.
Just give me 2 minutes. We'll be joining soon. Okay.
Sure,
Okay,
sure,
sir.
sure.
You also can take a 2-minute break because just now only
Okay,
your class is left. We'll join again within 1 or 2 minutes. Okay.
Okay,
Okay,
sir.
sir.
Thank you.
Blocked.
Yeah. Hello, students.
Hello, sir.
Yeah, I'm back.
Hello, sir.
So yeah, we'll start our class. So which class it is? Do you know?
Business law.
Yeah, business environment law. Very nice. Yesterday we have discussed. I'll share my PPT. Can you see PPT now?
No, sir.
No, sir.
Not
Just a
yet,
second.
sir.
Not yet. Give me 1 minute. Can you see PPT now? Hello?
Yes,
Yes,
sir.
sir.
Yes, sir.
Yeah.
So last week I couldn't join. Can you just give me which chapters were covered, sir? Can you just inform?
Unit 1 we have covered.
Okay, sir. Thank you, sir.
I think we have discussed about the corporate social responsibility, responsible toward government, investors, towards customer, towards employees, towards shareholders, towards the creditors, and towards the society. And business ethics also we have discussed yesterday. Did we discuss business ethics? Hello?
Sir.
Like unethical practices towards customers and towards employee. We have discussed yesterday, isn't it?
Yes, sir.
Yes, sir.
Yeah, ethics toward government tax evasion,
So the
economic
PPT
system.
will be available. Your PPT will be available, no, sir?
We'll share with you. Okay.
Okay, sir. Thank you.
Now today we'll be discussing unit 3. No, sorry, unit 2. So it is about infrastructure, like economic, social, demographic issues, political context, productivity factors, then global trends in business management, MNCs, we'll be discussing. But most important is your law chapters like unit 3, 4 and 5. All this consists of law. And those are little bit technical. These are theoretical. You can even go through the book. You can get the idea. But law portion, we need to cover it properly. So today we'll be discussing a little bit about, quickly we'll go through this unit 2. And unit 1 also, something was left over yesterday. This economic system. Economic system in business. And after that, we'll discuss little bit unit 2. Then we'll discuss about the law contract, which is very important. Okay. So I am giving little bit lesser time to this unit 2 because theoretical part. So we'll give more importance to the unit 3 law contract. So let us start with economic system. As you know that economic system is a set of rules and regulation that govern the production, distribution and consumption of goods and services. So economic system is very much important for the regulation for the production and distribution. And it is a framework within which all the activities are organized and managed. And mainly it is divided into three main categories like market-based, centrally planned, and mixed economics. And market-based economics are those which are called as free market economic. In this case, it is the freedom is given to the individual, and there is very less role of government for the interference in this market-based economics. And it is on the individual to make their own decision. And government has limited only what will do. Government will be giving regulatory framework, like SEBI, which gives the Security Exchange Bank of India, like similar kind of other TRAI in telecommunication. Those will be guidelines will be provided to the individual, and it is the individual to take their own decision. Then other one is centrally planned economics. It is fully governed by the controlled by the government, and in this system, government make economic decision and set prices and production level. And last one is mixed economy, which is one way there exists both government and private interference. Both will be there, and mixed economy is widely known as one way is public sector and private sector. These are all the economic system. Little bit. And next one is infrastructure. We'll be discussing here. Infrastructure in detail, you can go through your this study materials. So what is the infrastructure? Like energy, transport and communication. Energy, which is most important determinant for country's economic growth. Energy is the most important, like the country. Anything? Hello? Students, I request you to kindly mute your system so that others will not be disturbed. So energy, because it is an important determinant nowadays, you can see that many of the developed countries, which they say that we have nuclear energy. So that is the power of the country, and it is the determinant of a country for the economic growth. And per capita consumption of energy is taken as a indicator for a country's prosperity. What is the per capita income of the country? Based on that, you can think that what is the perspective or what is the prosperity of that particular country. Then energy is created through several sources such as conventional energy and non-conventional. There are many conventional and non-conventional energies are there. In detail, I am not going because it will take lots of time. So you can go through your study material and get the details. And next is transport, which includes your railway, roads, shipping, and civil aviation. Again, we are not going to in detail about the railway, roads, and shipping and civil aviation. Broadly, you should understand the basic things. The next is communication. Communication system comprises post and telegraph, telecommunication system, broadcasting, television, and information services. And now let us see the demographic issue and human development. And as you know that human resources is very important in the economic development of the country. So you need to understand what is the human resources of a particular country, and it is necessary to know the population of a country, demographic of the country at a particular time. Until unless you know the demography of the country, it will be very difficult for the taking decision or strategy for the development of the people. So what is the population and at a particular time, so that you must have seen that every 10 years there is a census are being done in the country to understand the population or economic condition of the country or the people's earning capacity. All this in detail it can be find out. And it is also important to know the rate of growth and distribution of population. What is the rate of growth? How fast the growth is, population is increasing, and what is the distribution? What is the pattern of distribution, male-female ratio, earning capacity? All this ratio also can be find out. The theory of demographic transition postulates 3 stages. What are those 3 stages? First stage of demographic transition, second stage of demographic transition, and third stage of demographic transition. What is the first stage? According to this theory, death rates are high in the first stage of agrarian economy on account of poor diet, primitive sanitation, and absence of effective medical aid. In first stage of demographic transition, what they have found that death rate is more due to the on account of poor diets, poor sanitation, and absence of effective medical aid. In second stage, rise in income levels enables the people to improve their diet. In second stage, what is found that it has been income level has been increased and the level of people also is developed. Economic development also brings about all around improvement, including the improvement in transport, which makes its supply of food regular. The entire sector tend to reduce death rate. So it is the improvement of the infrastructure, so that it will be facilitating to you for the supply of food regularly, and to entire sector tend to reduce the death rate. Once infrastructure development is there, the automatically facility will be provided to the people and the death rate will be reduced. And the third stage is, with the growth of industrialization, population tends to shift away from the rural area toward the industrial and commercial centers. Now, in the third stage, it has been seen that the population is shifted to rural to urban area. And one of the features of the economic development typically increasing urbanization due to its economical development. These are the different third stages. So now, what are the global trends in business management? There's the international relations, which is very important for the development of a country. In modern times, no state can afford to live in isolation. As you see that, you cannot be isolated from the world. Now there are various organizations in which the people have to be part of it, and you need to liaison with the people around the globe. Otherwise, you will be like South Asian countries. SARC. There's a all 7 countries together join together for the development, and they discuss time to time. Similarly, many of the G20 now are going on. So similarly, many of the world organizations there, you cannot isolate it yourself from the whole world. And international relationship is a much a product of necessity as a social existence system. For the social existence, international relationship, it is highly required. As you are dependent of some of the countries are dependent on you, like export, import, and many other things, exchanging product, technology, etc. It is going on. Otherwise, it will be very difficult to independently, you cannot survive. So with the industrial revolution, the world sank and the distance were reduced. Now you can call it as global village. Why you call global village? Because distance has been shrink due to this your transport facilities, due to communication facilities, internet availability. Nowadays, IT advancement, you can see that whole the country, whole world, it has become a smaller one. So you can easily connect with the people around the globe. The item industrial relation can be defined in 2 ways. What are those? In the narrow sense, if you take, it is a official relation conducted by the authorized leader of the state. Like our ambassador, they are in different countries, their ambassador in our country. So this is officially relationship we are making in with different countries. Another one is unofficially, or you can say all intercourse among the states and all movements of people, goods and ideas across national frontiers are called as can be made international relations, like exchanging of business partnership, tourism services. All these people coming and going to the different countries. This is also way international relationship can be possible. And again, you can see there can be usually 2 types of relationship between states. In case of country, it is like official relationship and all intercourse among the states and all movements of people. In case of a state relationship, cooperative and oppositional, like they are usually non-political and involve no power. So that is called as cooperative relationship. Another one is oppositional relation, imply conflict among groups and demand use of power. That is also called as where there is a opposition, there is a conflict between the people, between the 2 states, can be called as oppositional relationship. Now next important is multinational corporation, MNCs. So you can see all multinational corporation is a corporation or enterprises that manages production establishment or deliver service in at least 2 countries. A multinational corporation, which is a corporation that manages production or distribution among at least 2 countries, can be called as multinational corporation, and it can have powerful influence in international relations. If your companies are in different developing countries or developed countries, then international relations and local economy will be improved. And MNC plays an important role in globalization, because when multinational company, they are launching a product in different company, and your product becomes the globalized product. All over the world, your products are being distributed. So your name will be known to all over the world. So you are called as globalized. MNCs are also called transnational corporation, because many nations are involved in this one. That is also you can say as transnational corporation. And MNC can be divided into 3 broad categories, like horizontally integrated MNCs, vertically integrated MNCs, and diversified MNC. What is horizontal? Horizontal MNCs are who manage production establishment located in different countries to produce the same or similar product. If you are having same or similar product in different countries, it's called as horizontal integrated MNCs. Like, for example, you can see McDonald's. McDonald's product is same almost all the countries, but they have the business in different countries in the same name. Similarly, vertical integration manages production establishment in certain countries to produce products that serve as input production establishment in other countries. For example, Adidas shoe. You can see it serves as an input, and again in that particular country, that shoe can be based on the requirement of the people. It can be modified or manufactured, like sports shoes, the kids shoes, ladies, gents. All this you can differentiate and you can manufacture. Similarly, diversified MNCs, which make production establishments located in different countries that are neither horizontal nor vertical. It is not single product. It is not that modified product. It can be both together. Now, let us see the definition and meaning of MNCs. The corporation that control production facilities in more than one country, which makes the production in the main criteria is more than one country. Such facilities have been acquired through the process of foreign direct investment.
Sir, somebody noises, sir.
Yeah, I request all of you to kindly mute your system. Yeah. What is there? Your business should be more than one country, and by the process of FDI, foreign direct investment, and that participate in international business. However large they may be, solely by exporting or licensing technology are not multinational enterprises. Only exporting or getting license, you cannot say that it is a multinational company. You should have the business in more than one country through the process of foreign direct investment. You should have the direct investment in that country as per their rules and regulations, and only if you have the license or this export-import facility, that cannot be called as multinational company. And the various benchmark of used to define multinational company are like produce rather than just distribute abroad as well as in the headquarters country. Only distribution you cannot say, there has to be production has to be there in that particular country. Then operate in certain minimum number of nations, like minimum 2 countries. You can say more than 2 countries there has to be you should serve, or more than 2 countries you should have your product or business. Derive some minimum percentage of its income from foreign operation, like for example 25%, 35%. FDI, sometimes government, particular government, government want the individual country, they want that our share should be 51%. Next, they can 49%. They can have the other country. Those who are operating business in our country, they can have 49%. In this way, there should be certain percentage has to be fixed, and they have a certain minimum ratio of foreign to total number of employees. So, in the total number of employees, certain percentage has to be there. It is not that completely foreign. If a foreign company is there, completely foreign employees will be there. There should be Indians and there should be foreign. There should be some percentage of it, and possess a management team with geocentric nations orientation. So management should be geocentric, and in different country, different management orientation has to be managed, and directly control foreign investment as opposed simply of holding share. Means directly control of foreign investment. There has to be direct control of foreign exchange. So only in case of like holding share or holding share in company, it will not be sufficient for MNCs. So these are the few criteria for an MNCs. Now, what is the merits of MNCs? Quickly, we'll finish this one. Then we'll go for this law of contract. So next is merits of MNCs. What are the merits of MNCs? MNC help to increase the investment level and thereby income and employment in host country. Once MNCs is there, it will increase the investment level, thereby income level also it will improve, and the employment opportunity for the host country people. They will get, once foreign country is established, then the host country will also get an opportunity to get the employment, and their income level will be increased, which will be helping to the foreign currency earning in the host country also. The transnational corporation has become vehicle for the transfer of technology, especially to the developing countries. To the developing countries, for example, developing countries are some developed country MNCs are in developing country. So what they are getting, their transfer of technology, they are getting the license or technology advancement from that particular company. Foreign company, developed company, they are getting the technology for the manufacturing the product here. For example, some MNCs are in India from the developed countries, and we don't have that kind of technology. So those technology can be transferred from them to us, so that we'll have such kind of technology to make our own product. So transfer of technology is possible by the help of MNCs. They also kindle a managerial revolution in the host country. What they do? Managerial revolution. If their management system is, for example, Japanese management system, if it is a good, then we can adopt that kind of. If Japanese companies there, we can learn from them what kind of management they have, what kind of technology they have. So we can share the technology, we can share the learn the management system, which will be better for the host country, and the employment of high sophisticated management technique. And you can understand the sophisticated management technique like SAP system, American system, that also we can implement in our technology, like emols and equals, like integrated material management system, integrated accounting system from different developed countries. We are taking their technique and we are using in our management system. The MNC enable the host country to increase their export and decrease the import requirement. What is that? Once MNCs are there, you can manufacture the product in the host country, and the requirement of import requirement will be reduced, and you can export the product to the other countries as the manufacturer start from the host country. And they work to equalize the cost of factors of product around the world. They will try to equalize the cost factors of production around the world. Based on that calculation, they can see what is the cost factor of production in that particular host country. And based on the requirement of this, like raw materials, this your transportation, then labor cost, all this, based on that they can equalize the cost factor. Then MNC provide efficient means of integrating national economies. So it is efficiently integration, national economy will be improved due to the exporting your product from the one country to other. The enormous resources of the multinational enterprises enable them to have very efficient research and development system. You can have effectively you can do the research and development. Once manufacturing process is there in the country, then you have the research and development team. In that you can you have the opportunity to develop and research the product for the further kind of development. Thus, they make a commendable contribution to the invention and innovation. Once research and development is there, then definitely you will have some kind of new invention and innovation in your product you can identify. Then MNC also stimulated domestic enterprises because to support their own operation, the MNC may encourage and assist domestic suppliers. What is there? Once company is there for raw material, what you will do? You will depend. MNC will be depending on the host country people from host country. They will be assisting for the raw material for the manufacturing of the finished product. And MNC help increase competition and break monopolies. Once MNC is there, competition will be increased the monopoly of the individual company who feels that we are the only company manufacturing this one, it will be broken, so that it will be helpful to the customer to get the suitable product for them. What are the demerits of MNCs? The MNCs technology is designed for worldwide profit maximization, not the development need to poor countries. What they do, MNC, they think about the technology is designed in such a way that they want profit. They are not much interested for the development of the poor country. Rather, they are much interested toward the generating profit. And through their power and flexibility, MNC can evade or undermine national economic autonomy and control. And their activism may be inimical in national interest. Here, what they've done, once you give the opportunity to MNCs, other countries, then the local people who are manufacturing such kind of product, so they will be discouraged, because the MNCs may provide better quality of product than them, so they will be it will be very difficult for them to compete with the MNCs. So it is discouraging matter for the national interest also to local people. MNC may destroy competition and acquire monopoly power. Once MNC is there, naturally their product will be superior than the local product, and they may destroy competition because they will have the monopoly, because they are the only quality product and they are the dominant in the market, so they will have monopoly and local people will be suffering. So that is the demerit of one of the demerits. The tremendous power to the global corporation poses the risk they may threaten the sovereignty of the nation in which they do business. There may be the threatening for the sovereignty of the country due to security reason. There may be a threat to the sovereignty of the host country. In MNCs retard growth of employment in the home country. It will be, once they deploy their own people, it will be very few number of people will be getting chance to get employment in the particular MNCs. So that will be another this demerits. The transnational corporation causes fast depletion of some of the non-renewable energy resources in the host country. What will there? Non-renewable energy, which will be finishing soon, because they are using the energy from our particular country. So it will be challenges for the renewable energy also. So the depletion will be there, and they also have accused of the environmental problem. They may create environmental issue in the particular nation, like pollution and other things that may create to our country. So that is one of the another demerit. The transfer pricing enables MNC to avoid taxes by multiplying prices into company transaction. So sometimes they may try to avoid taxes by manipulating price. So by price manipulation also they avoid taxes to the government. So that is another demerit. The MNC undermine local culture and tradition, change the consumption habit for their benefit against the long-term interests of the local community. So what they do, they don't bother for the local culture. So again, it's unethical in nature. If you do not follow the culture and tradition of the local, then people will not be satisfied with that one. So which changes the consumption habit of their benefit against the long-term interest. For example, ITC company, when it is launched first time cigarette in the country in 1911, by that time, traditionally, what was the consumption habit of people? That they were smoking bidi, hookah, chillam, all this kind of habits were, smoking habits were there. But once the ITC has launched Caesar brand of cigarette, they changed the habit of smoking of the local community. So after that, they started smoking cigarette. These are the few demerits of MNCs. Now let us see foreign capital and collaboration. And you see that most of the countries in the world embark in the road economic development and have developed foreign capital to some extent. The need for the foreign capital for a developing country like India can arise on account of the following. The accounts are: domestic capital is inadequate for the purpose of economic growth. If you see that our domestic capital is not sufficient for the purpose of economic growth. For that, we need to have this foreign capital. So that is the reason FDIs, foreign direct investments, are being encouraged in our country, so that foreign exchange currency we can earn for the development of our own growth. So that is the main reason that domestic capital is inadequate, and for the development economic growth we need foreign investment. For want of experience, domestic capital and entrepreneurship may not flow into certain lines of production, because we don't have much experience on the particular production of the particular product. So if the foreign MNCs they come to our country, so we can learn the methods of entrepreneurship in the particular product and production of the particular product. And there may be potential savings in a developing economy like India, but this may come forward only at higher level of economic activity. It may be potential saving, but in case of very few cases, and in case of higher level of economy, this kind of activities may take place. And it may be difficult to mobilize domestic saving for the financing projects that are badly needed for the economic development. And foreign capital brings with the other scarce product factors such as technical know-how, business experience, and knowledge, because it brings the technical know-how. Foreign developed countries, whatever technology they have, so we can know the technologies and business experience from there, and knowledge we can gather from them. So these are the basic reasons of foreign capital investment. And this is all about the unit 2. Now we will be switching over to unit 3, which is very technical in nature and which is very common and very important for each and every individual. That is law of contract. Next, we'll be discussing about the law of contract. In this unit, we'll be discussing about what is law of contract, what is agreement, what is offer, acceptance, consideration, capacity to contract, what is contingent contract, quasi contract, performance, discharge, remedies to breach of contract, partnership, sales of board, law of insurance, negotiable instrument, notes, bill exchange, crossing of check, endorsement, holder in due course. These are the units. This considered the very big unit, and in that the most important law of contract, and it is very technical in nature. And day-to-day life, you have lots of contract you are doing, but you do not know what the exactly contract is. If I ask you question, have you done any contract? Anyone? Have you done any contract with any anybody? Hello?
Yes, sir. I had a contract with my company for my last company with 3 years.
Okay, that is one contract you have signed. Okay, can you tell me what do you understand by that? You have signed for the company for 3 years contract. So what does it?
Yeah, it has some term. It had some terms and conditions. So, if I want to leave the company by breaking the contract, how much amount I have to pay, and then in these 3 years, how I should behave to the company. Those things will be there in the contract.
Okay, they have. It is a written contract.
No, sir. It's not written. Right.
Yeah, it's a written type only. So we had a bond.
You have signed on that one?
Yes.
Yes, sir.
Okay. And they have written, they have given certain terms and conditions, and you have accepted that one, and you have signed on that one. Okay, you have accepted. Isn't
yes.
it? They
Yes,
have
sir.
proposed something, you have accepted it. And that's a contract. Any other contract, anyone? I can say all of you have done many contracts. Even day-to-day life, you are signing contract, but you do not know. Anyone else? I can say all of you must have made contract today itself. Almost all of you. I'm right or wrong?
Yes, in office we used to have a contract while we joined, something like that. I had a contract.
Office you have joined, there's a contract. Okay.
Yes, and while like 5 years back, I had to sign a contract for a company for 2 years bond, and I breaked it, and for that they have fined me, something like that.
Okay,
Same
fine.
scenario
Yeah.
which Vinay
Yeah, you have
Kumar
signed.
explained right now.
Besides that, any other contract you have signed or accepted? Done contract with anyone?
Sir, when we install an application, it also make us to sign some contract or agreement.
Which application?
Any application, sir.
Okay, any application you are making, that is also a contract. Yes. Anything else? Anybody else? Do you think the contract should be in written or verbal?
Written, sir.
Verbal, if I say in word, will it be a contract?
No, it's not a contract if it is going to be only verbal.
Okay, that doubt I am going to clear from all of you, that it is not necessary that it should be only a written contract. That is the concepts we have. We feel that only written contract has to be written. It is not necessary. Even verbal contract also can be done. Okay, we'll discuss in detail what exactly contract is. If I say, how many have you traveled by bus today? Anyone has traveled in bus today? Bus, car, auto, anything?
Yes, sir.
You have traveled by bus?
Yes, sir.
Okay. If I say it is a contract, right or wrong? What do you feel?
I think it's not a contract, sir, because I'm paying money to travel in bus.
You are paying money to traveling bus. Okay.
Yes, sir.
Why not it is a contract? Then what is a contract then? This is a implied contract. If you have traveled by a public bus, that can be called as contract. Why? Because there is a bus number, route number, there is a fare, and you have been allowed to the bus, you have bought a ticket, you have paid for that one. That means the transport company is inviting you to travel from one place to another. And for that, you have accepted that one, you have paid the fee amount. For example, 10 rupee or 20 rupee, whatever you have paid, you have paid. They have given invitation, you have accepted it. It's a contract. Okay? This is an implied contract. It may not be written. It may not be verbal. It is understood that you have made a contract with that one. You are taking a cell phone connection. What you do? You put signature. They ask you to put a signature somewhere, isn't it? Some agreement will be there. Right or wrong?
Yes, sir.
You are signing that one. That is a contract. Okay?
Okay.
You are going to a restaurant for taking food. That is also can be called as contract. So day-to-day life, we are doing many contracts, but we do not know what each contract is. So it is very essential to know for day-to-day life as well as in business. All of the business who are involved in it, they should understand what contract is. So we are going to discuss about the law of contract. Okay?
Excuse me, sir.
Yeah, tell me.
Excuse me, sir. Sir, is a student university and academic course is also a contract, type of contract?
Economy?
A student and university, between student and university and
Yes,
the
of
academic
course,
course
you have
is
taken
also a
that
contract?
That is also a contract? Yes, of course. University has given advertisement. You have accepted that one, you have paid fee, taken admission. This is a contract.
Okay.
We'll discuss in detail what contract is.
Okay.
See, the relating to contract in India is contained in the Indian Contract in 1872. How old it is? 1872. Till now it is the same. But I don't find any kind of demerits in that one. It's a very clear. So mostly it is English Act. The Act is mainly based on the English common law and came into force on 1st day of September 1872. And it extends to whole of India except the now I do not say the state of Jammu Kashmir. Earlier it was different. Now it has been. I think it will be included in Jammu and Kashmir also. So we'll put it in red because letter status I cannot say. It extends to the whole of the country. And the Act deals with the general rules relating to all types of contract and contains special provision governing specific contracts such as those bailment, pledge, indemnity, guarantee, and agency. These things we don't have in our syllabus. This bailment, pledge, indemnity, and guarantee, and agency. Agency is there. This bailment, pledge, and indemnity is a very huge, vast. So in that case, we don't have in our syllabus, but it covers all this bailment, pledge, indemnity, guarantee. All this it is covering, and agency covering in the contract act. This act also contains provision relating to contract of sales of goods, and sales of goods act also coming under this one. Besides, there are separate acts that deals exclusively with the contract related to negotiable instrument. In case of bank, this check, transfer of immovable property, insurance, etc. It's also governing, but it is a separate act. It is important to note that contract act does not cover in its ambit any social custom and uses certain trade. Social custom, when it is there, it is different. In that case, it won't be implicable. But these are the basic background of law of contract. And now let us see what is contract. In section 2H, what it says, an agreement enforceable by, very keenly you observe that an agreement enforceable by law is a contract. It's very simple. Agreement which is enforceable by law is a contract. There are two parts. There has to be an agreement, and the agreement should be enforceable by law. Then only it will be called as contract.
Sir, is this, sir?
Yeah.
Sir, is this contract law 1872 section 2?
H.
Okay, sir.
It says that agreement enforceable by law is a contract. What is, there are two parts. Contract is agreement plus enforceable by law, which is legal obligation. There has to be some legal obligation. Right? One is agreement and the other is obligation, which is enforceable by law. Obligation is legally it will be. Otherwise, you make a contract with someone, agreement with someone. A made an agreement with B. If you kill C, I will give you 50,000 rupees or 1 lakh rupees. This is not a contract. Even though there is an agreement, but there is no legal obligation. So, if the agreement is made and legal obligation is there, that it can be, in broader sense, it will be called as contract. What is agreement? Agreement is the outcome of the concession between the two parties. There has to be two parties who enters into a contract, and the promise made between them represent concurrence of their mind. In a similar way, they should think. Suppose you have bought a ticket for the traveling in a bus, and conductor, he understands that your intention is travel in the bus, and you also have an intention that I will travel from so and so place to. Both are in similar mind. If there is no concurrence of mind, then it will not be, again, it will not be a valid contract. So we'll discuss in later stages what are the differentiation. So now you understand agreement which is enforceable by law is a contract. Agreement is the outcome of the concession between the two parties. One party is to be proposed and another party should be accepting. One is proposal, another is acceptance. Once the proposal is there and the other is accepting, For example, you propose someone, your friend, that I will sell my bike for 20,000 rupees, and the other person, he has accepted that yes, I will pay 20,000 rupees by the bike. And once he pays 20,000, if you are not giving him bike, then he can say you can go to court of law that you have not accept the terms and conditions, you have declined from your promise. So he can take the legal action against you. Similarly, if you give him buy and he is not paying you 20,000 rupees, then you may take action against him. So there has to be one proposal has to be there, then another one has to be acceptance has to be there. And there should be concurrence of similar mind. If you say, for example, I will sell my bike for 20,000 rupees. This will not be a valid contract. Why? Because you didn't mention that which bike. Suppose you have two bikes. You say that you have Hero Honda bike also. You have Suzuki bike also. So two bikes you have, and you said to your friend that I'll give my bike if you pay me 20,000. He must have thought the Suzuki bike he will give, but whereas you are giving Hero Honda bike, so he may not accept it. So that is in total, that is void ab initio. Since beginning it is void because you didn't say that which bike you wanted to sell. So he also doesn't know which bike you are going to sell. So this is not the concurrence of similar mind. So that will not be considered as contract. See, there would not be an agreement if the parties do agree, but on the same thing in the same sense. Same thing. So if you say that I am selling my Hero Honda bike for 20,000 rupees and he accepts it, he understood that you are going to sell the Hero Honda bike, in that case it will be accepted. Consensus is not sufficient. Only accepting it is not sufficient. There has to be consensus ad idem. That means he should understand that both the parties should be understand that for which thing you are making contract. Section 2C of Indian Contract defines the term agreement as every promise or every set of promise forming consideration for each other is a agreement. Means there has to be promise and there has to be a consideration. You promise to give your bike. In the consideration, he is ready to give 20,000 rupees. So that is an agreement. That is called as agreement as per section 3. For example, A received rupees 10,000 from B and promised to supply him 10 bags of rice after 10 days. This is an agreement is made and it is a promise. It shall be a set of promises. He promised to supply 10 bags of rice after 10 days and B promises to pay him rupees 10 days after the rice is supplied. If he accepts that yes, I will pay this much after 10 days once rice bag is received, then this is called a set of promise. So this is now one proposes, another he has accepted. Then only agreement is equal to an offer plus acceptance. Somebody has to offer and other has to accept it. This is just starting of law contract. What is the contract? We'll discuss in detail in next class. Tomorrow we'll be discussing in detail. Okay? So I think time is over. If any doubt till now, you may ask me. Or else today we'll close the class here.
Sir, can you share your contact number with us, sir?
My contact number. Okay. It is, I think at the end of the slide, it is there. Yeah, chat box I am writing. Yeah.
Can we have this PPT shared with us?
Yeah, I'll be sharing. But right now I am not sharing because there's a lot of changes, amendment, all these things are there. So which may create confusion in your mind. So once it is over, I'll share with you. Number you may
after the course is over. Yeah, like after the course is complete, like fine. Okay.
I'm sharing my number as well as email ID also.
Okay, sir.
Even you can ask any doubt later on also you can ask me.
Okay, sir.
Yeah,
Yes,
this
sir.
is my number and this is the email ID.
Thanks for the sharing, sir.
Okay.
And thank you, sir.
Anything? Have you understood? I wanted to know. Hello.
Yes, sir.
Yes, sir. Yes, sir. Yes, sir. Yes, sir.
I have understood that.
Okay, fine. Now some
But-
doubt is clear. Something you got it?
Yes, sir.
Yes, sir.
Okay, fine. Then tomorrow we'll discuss about the details of contract. Okay. Then you have very
Yes.
long this company law also very interesting, and you should all of you should know. So we'll be after contract law we'll be discussing company law also. Okay.
Okay, sir. Sir, another question, sir.
Yeah.
Sir, who is our head of the department, sir?
For what?
For our department.
Which department?
Our department, sir.
You mean to say distance education?
Yes, sir.
Director is there.
Okay, sir. Okay, sir.
Yeah. Okay.
Thank you, sir.
Anything else?
So when does the first sem exam commence, sir?
It is very soon. We'll be giving you information about that. Once it is finalized, we'll upload in the website and as well as we'll notify you. Okay.
Thank you.
Okay. By the end of the this PCP class, you will come to know when it will be. By that time, we can finalize. Okay.
Yes, sir.
Thank you. See you once again.
Thank you, sir.
Thank you, sir.
Thank you, sir. Thank you, sir.
Thank you, sir.
Thank
Thank you, sir. Thank you.
Thank you, sir.